long time, just a lovely you used to be. How's your new love? Are you happy? Doing fine. Still much to be. What's that, darling? I'm doing just fine. Just fine as you. Trying to stay as I love you and I miss you. I did you wrong. Oh, it's time to say. Bless you. Gotta go now. Conway. 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 Conway.
Hovering by my suitcase, trying to find a warm place to spend the night.
Conway.
Raindrops falling. Seems I hear your voice calling. It's all right.
All right, so that's an 8. That's an 8. 8,691,047 shares. 8,691,170 people. 6% of the stock. Which I have to say to you guys is pretty darn impressive. Pretty darn. I just need to get a notebook out. Whew, it's hot here. And I'll get one more complaint in. My foot hurts. But other than that, everything's good. No complaining other than that. They tried to drive the stock down this morning. And I think it shows that, look, they don't care. They, don't get the impression that they're scared. Don't get the impression that they have a system. It's backed up by computers, and they always win. Always win. Except this stock isn't going to stay in their wheelhouse. It's not going to stay down here. This stock won't. This stock will no longer, I don't think it'll be on the over-the-counter. So I would suggest to you every stock that remains in Charlie Cheese, Crawwell, the ineffective at the OTC markets, every single one of those is going to get destroyed by the criminality. They're all in on it. It's a one-way shoot to a handful of men on Wall Street. And the key with Railtown, not only are we going to get out of here, Railtown's getting out of this space very quickly. So let me show you a couple of things, and then I'll go through. It's a rainy night in Georgia. It's a rainy night in Georgia. I'm going to show you that one again. Oh, it's already here. It's a rainy night in Georgia. I'm going to show you one other one. I'll show you one other one if I can find it. Rainy night in Georgia. It's been raining all over the world. Conway Twitty. All right, let's see. Oh, tired. All right, let's start with one thing off of Twitter from Patient Swings for Railtown. The stock right now, let me see where it's trading right now. They got it down. The bid is $60.87. The ask is $61.99. No volume all day. Anyway, it's good to see points of view from people you trust. Railtown, you know what else is leaving the station? The PR train is beginning to roll. Hope you packed a large suitcase. Going to be a long trip. So getting the sense that the train has left the station. Let me show you. You can see I screwed up here, but you get the idea. This is out of Canada because this chart service, I can't. Anyway, there's a glitch. I can't show the U.S. stock, but it's the same pattern. You see the high a little over a year ago. That's when that research report came out, approximately. And then if you draw a line horizontally across, I know it's fat there, but just pretend it's thin. And then it's thin at the end there. That is the resistance. That's where we are. We're chopping around there. It's perfectly normal. Came up to the high and then went into a sideways pattern, broke well above it for a couple of days, and now they come back down to it. I think it's good because if it went more quickly, you would have the risk of a sharp correction. This gives time for any weak hands to get out. It shifts to other buyers, and it sets the stage for another move upward. And then in the long term, that chart, you won't even notice this little blip. It'll look like it just went up. But here's a shorter, a fewer months. And in yellow, I drew my support line that I see there, extending all the way back into other trading. Of course, when I draw, it's not as careful as everybody else, but I think that yellow line is support. And you'll notice that as we've come up in this pattern, even the other day when they drove it down, it made a higher low. They were unsuccessful at breaking that. And then I drew the blue line just to show you. I think it's too soon to draw it, but I drew it anyway. At some point, there'll be a pennant formation or a flag or whatever you want to call it that it'll break out of. I think it's way too soon probably to draw that blue line. But my guess it would be another, I'd say 3, 4, 5 days. But it maybe not, maybe not. Key on this chart is to try to show you that it's not violating support, in my judgment. I want to revisit this. NVIDIA's valuation. See the green, 4 trillion. And then you look at Meta and Alphabet, 2 players that I don't think have acquired anyone recently. They might. Combined, they're 4 trillion. And then Microsoft is approaching 4 trillion. Well, and then Apple, you look over there, it's 3 trillion. Those are your buyers. Those potentially are your buyers if Railtown decides to sell. But down the road, I don't want to get ahead of ourselves, but that's, if you look at Railtown as a venture capital investment, I believe we're getting in at the, not at the, maybe at the angel round, friends and family round prices. We might, I don't know what they paid, but we're definitely getting in at the sort of mezzanine private equity guys range, guys. And to just kind of continue the analogy, it's not exactly right. There's going to be an IPO. I believe the IPO begins for a brief window, might be a couple of days, couple of weeks, could be a couple of months. It begins when they announce that the merger is completed, and then you're going to see the buying, and that new level is the start off point for whatever's going to unfold. And so I forget the rest of the point I was going to make, but I think it's very exciting between here and then. I do continue to believe there's a 10x in that initial, it's not an IPO, but I'm just using that analogy of we're in the private equity round, and now it's going to go public. And I think there's a 10x in that initial leap. But once it's public, these stocks, then they go. It's an analogy, not a perfect example. Let's look at, I'm sorry, my foot is hurting. Let's look at some of the scores. Railtown is down, very, very little, but it's in the red. 0.6087, that's the bid. Finger is down, 9 cents. I thought it was down less than a penny, but it's down 9 cents. It's at 165.99. There's a stock out there that I talked about with somebody this morning. Next Trip, it's down 5 cents, 3.98. ZJYL is actually in the green by four digit, 0.0002 at 63.9. Railtown might pass ZJYL shortly. And then G-Bucks is up 22 cents at 192. And I don't know, we could try GME to see where that is. 23.63. Remember just 2 or 3 weeks ago, it's going to moon. Get in at 27, 28. Don't put words in my mouth. All right, I said you said it's going to the moon, and you said it's going to moon. All right. Mea culpa, mea maxima culpa. All right, and then holy, holy. Dream of only me. And then she runs just like the wind will. Ale ole. Sing, sing a song. Sing it out. Sing it long. Yeah. China demands its shipping giant join Panama port deal. See, China's focusing on the future. We're focusing on Israel. All right, let's go. Hey, Steve. Going to be the rich man. Oopa, oopa. Marco Flug, how are you? Ted Williams. CJ Yukon. Hey, Steve, you are the first. Nova Scotia. Good afternoon. What's up with finger motion? And where's Ham? You know where Ham is. You can find him every day, early, midday, late, during the night on Twitter. How you find him on Twitter? You go to Twitter, you go up in the search area, type in finger, FNGR, type in Gbux, GBUX, type in any manner of symbol that you know of, hit search, and you will find Ham at shortkiller. However it comes out, and you can follow him there, and you can listen to his calls live if you sign up for notification, or you can go back and listen to a recording. So that's where Ham is, and thank you for asking. What's up with finger motion stock? Well, I really don't know how seriously to take that, but we can take it seriously. Even though I'm not positive you are. Finger motion, according to Yahoo, is trading at 165 right now. It's down 9.5 cents. They had their earnings report announced yesterday, and Finger announced its results for its first quarter 2026. That was the period ending May 31st, 2025. They reported quarterly revenue of $8.46 million, which was a 1% increase year over year for the quarter. Their telecommunication products and services business revenue was 8.31, down 1% year over year. So it made up the bulk of their quarterly revenue. The Daji platform revenue grew to $10,938 compared to $463 year over year. Command and communications segment, that's the contract which I'm not 100% sure, but I don't want to be wrong. You'll have to go through the news stories yourself. They've announced before that it's a exclusive entire country contract, but then they have to bid. They have to, tender bids on deals as they come up. So that confuses me. But anyway, the command and communications segment contributed $109,000 in revenue versus zero a year ago. The big data segment generated $27,000 in revenue compared to a year ago. So there's some green shoots there, but in general, finger motion came in with revenue essentially equivalent to what she's done in the last 2 or 3 years. The there's a net loss of 4 cents per share. The company does have $2.8 million in cash and cash equivalents, and they have total assets of 55 million. And the number of shares outstanding is 60 million, almost 60 million. To quote Martin Shen, quote, while top line revenue showed modest movement with margin pressure driven by evolving business dynamics, we are encouraged by the initial revenue contribution from our command and communication platform, which, if handled correctly, that could be a major contributor to long-term revenues, as well as the steady build-out of the Daji and big data businesses. Again, particularly, personally, I wish they'd just not talk about the lifestyle app and just go to big data. But anyway, big data could be something in the longer term. Our focus remains on building higher margin, data-driven business lines, refining our operations, and executing on our strategic roadmap to ensure long-term scalable growth over time to provide some solid value, for our shareholders. And that's what's happened, Adam. Further than that, I would refer you to Ham's calls, and I appreciate the sincerity of your question. Hey, Eddie Eagle. Hey, YouTube. Hey, Gary Metal. Don't give up my age. I wouldn't. Mike sounds off. No, it's the singer. It could be the mic, but I think it's the singer. I had a kind of a sleepless toss and turn night, so it's probably more about trying to get shake off the cobwebs. DMAX, something good is just around the corner. Onward and upward. CJ Yukon added. Good for you. Take advantage of the selling. It's not going to be under 70 cents much longer. Good for you. Ryan Sartell. Hello, Walls. Finger accounts receivable. Martin Shen needs to collect his money on all operations his company has done already. Yeah, I don't know the breakdown on that, and I'm not enough of an accountant. I'm not an accountant to understand it. To me, Nappy, the two, one area, I guess there's three things. One is that current receivables has been on that book for a long time, but it still says current. So I'd like to know what that is. I wonder if it's a rolling. What they do is they have a certain amount of capital. They go buy minutes from the government at a discount, and then online customers buy those minutes at a premium. And it's always in the turnstile. So maybe that large receivable is a rolling receivable. I'd love to know that. Because they've got to go buy these huge amounts of minutes to have them and then sell them. And it would seem like they'd get that money right away when they sell them. So that's not really a receivable. Anyway, I don't know how that's accounted for. The other thing is the C2 contract. They have two. Remember, in the third quarter last year, they signed up for 2 vehicles to install their equipment, and we just saw the revenue now. $100,000. So it's two. It's probably gross 50 grand a vehicle. They raised money in December, at least maybe 4 million, 3.5 million available to go to their new contract. I don't know what that means. Do you divide it by, let's say they put 3 million to a new contract and each vehicle's 30 grand? I don't know. There's 100 vehicles. And if you use the October to, let's say, April, May timeframe to deliver and get paid, well, if they did 100 vehicles, I don't know. That might be way too many. But if they did a bunch of vehicles, maybe revenue would show up in September, October, and that could be a positive. A friend of mine who knows how to read through all that pointed out, well, it'd be on the balance sheet. Maybe it's part of that 39 million. I just don't know. I really don't know. I'd love to have more insight, more management discussion on those two things. But it could be that Finger Motion is going to start making good revenue gains on that C2 contract. It's good to know they have the cash in the bank. But you need a little more color than what's in those financials. At least I do. But the company, NAPI, is never going to be, at least in the near term, is never going to be one where they bring in capital and they don't put it out right away. In the top-up business, they've got to go buy the minutes. In the C2 contract, they've got to go buy the automobiles or the Jeeps or the drones or whatever it's going to be, and then the equipment, and then install it. They're always going to be in a position where they have to lay out cash. The money rolls, and then they have a receivable. So I don't really know how. I don't personally have enough information to understand what that little snapshot of their cash flows and their balance sheet and all that means. It's not that hard. It's just not provided. The information isn't there. I guess one more quarter we'll start to understand it. The positives I see, though, is that the C2 contract, I could be crazy. We don't know how much they paid for those vehicles that they made 100,000 in revenue on, 50 each. But if it's 50, I don't know, if it's 60 grand that they paid for the vehicles, the cost all in is 60 grand a vehicle. I don't know. They raised $3 to $4 million net in December. There was a month-long holiday, but let's say they got to work in February. I don't know how many vehicles they could have done. 50, maybe 50. And so they get that going February, March. They deliver them April, 6 months from April. Maybe October, maybe November. There's this, let's say it's 50 vehicles times 50 grand each revenue. They'll have, doesn't sound like much, 2.5 million revenue coming in. But it's something. And that gets one cycle going. I would have liked to see them ramp that up much more rapidly. But, it'll keep the lights on. It'll keep the cash flow going. And the surprises for Finger are the big data and it all ties to big data. It's the insurance contracts potentially, the big cloud. The data is a big part of the future for Finger Motion. Hey, Eric. Wow, Eric, welcome. Welcome, Eric. Glad you're here. I hope I say something that makes sense while you're here. Hey, Ward Richardson. Thank you for coming on. I'm sorry I misquoted your number yesterday. I thought I should have known it was 400,000, not 4 million. So, my mistake. Yeah, we can go over the PR from Railtown. I'm sorry I keep moving. I'm very uncomfortable in my, I have gout in my right foot. It's too much information, I know. But it's just an odd pain. It's very painful. And this isn't as bad as it can get either. All right, so the news was this morning, 5 hours ago, that Railtown, and remember, this is I think this is the fourth tie-up. I think it's the fifth PR recently that has something to do either with a business association or a product announcement. Anyway, the news is Railtown AI announces a new feature release called Auto Triage. And this is part of the company's best in class. And that's what gets me so excited. There's more follow-on news on the wind surf and whoever bought them, Contagion or something, software. And there's more news on that. And I really believe what Railtown says, that their product is best in class. I really believe that. So anyway, let me read it again. Railtown AI announces a new feature release called Auto Triage as part of the company's best-in-class conductor developer platform. Railtown is pleased to announce the launch of Auto Triage, a groundbreaking new feature within its conductor platform that works in concert with the conductor root cause agent, triaging in software development. All right, there's a big ad in the middle, so I screwed that up. So Railtown, a leading innovator of AI-driven developer solutions, is excited to announce the launch of Auto Triage, a groundbreaking new feature within its conductor platform that works in concert with the conductor root cause agent, period. Now we go through the ad. Triaging in software development involves identifying and prioritizing critical code issues, similar to managing a hospital ER. It categorizes issues by severity, priority, type, status, and whether or not the patient is your family. The conductor root cause agent automatically detects and analyzes software errors in real time, with the auto triage feature prioritizing the most urgent issues for immediate action. That sounds fantastic. Auto triage eliminates the delay between error detection and action. When the conductor root cause agent identifies a new issue, auto triage immediately notifies the team of an urgent and critical issue that needs to be addressed. A bug ticket is instantly created on the team's board, complete with detailed RCA data, root causation data. As the error propagates to other environments, Auto Triage adds live updates and comments to the same ticket, keeping the entire team aligned. This innovation is only possible because of Railtown's advanced conductors engine. Railtown's advanced conductor engines deep integration and understanding of the CI/CD systems. Conductor RCA detects errors early and often, just like they vote, during the test or staging phase of a build and intelligently groups them by root cause, proactively pinpointing the exact lines of code, the systems which have been affected, and potential fixes, dramatically reducing mean time to resolution. There's another acronym, MTTR. So you can use it on your text messages. Just put in MTTR, and your loved one will say, "What does that mean, honey?" It means mean time to resolution, MTTR. So you can say, "Honey, I'll be home. What's the estimated MTTR for dinner?" All right, so quote, "This is about getting the right eyes on the right problem immediately, instantly," said Marwan Haddad, CDO of Railtown. Quote, "Auto triage gives engineering teams the context and clarity they need to act quickly, effectively, without slowing down development." Further quoting, "As we continually expand and deliver our best-in-class," see, there it is again, "best-in-class tools and services to the market and to our broadening vertical customer base." That's my understanding of that, is they're targeting medium, small, bigger companies, but they're targeting the vertical application of this technology, not spread out across the entire internets, as I guess they're called. So as we continually expand and deliver our best-in-class tools and services to the market and to our broadening vertical customer base, the company will remain constantly committed to our DNA of innovation and R&D, says Corey Brandolini, CEO of Railtown. And then it describes the company, which we might as well just read that. It always helps to know what you're in. Railtown AI Technologies is a leader in developer productivity tools and agentic frameworks. It's based in Vancouver, Canada. Railtown delivers solutions that streamline software development workflows, reduce downtime, and increase the speed of innovation for engineering teams worldwide. By embedding intelligence into every stage of the software lifecycle, Railtown is redefining how modern development teams work. So I think it's they have 4 companies, so they have 4 products basically, and they announced another product. Let me see if the headline's here. Last month, Railtown AI Technologies Inc. launches powerful Visual Studio extension to supercharge developer productivity. They announced that last month. So I count that, I don't know if that's a new product or an extension, but if you count that as a new source of revenue, and now there's this, that's 6 distinct sources of revenue that I think are distinct anyway, but they translate to me into a powerful case that Railtown AI can jump to the same level of revenue that that other company, Windrift, had. Well, yeah, Windrift. I can't remember. I know that's a restaurant in Avalon. But so let's go through the headlines just again from Yahoo. 5 months ago, Railtown Technology announces memorandum of understanding to acquire AI Partnerships Corp. That is absolutely massive, and it's going to change the whole story, not only to the better, but to the much better. It's going to become the bigger, beautiful Railtown, Bill. Anyway, that's 5 months ago. That's what we're waiting on, and that's what's giving us an opportunity to add to our positions. The big boys and girls who understand the space, they either know about it, but because they know too much, and because it's restricted, they can't buy anything. And then the other big boys and girls may not know about Railtown, but nobody's going to tell them about it because Canaccord has it on their restricted list. So we're in now a 5 month wait for that acquisition to be finished. 2 months, probably normal, 1 to 2 months to get it approved. The other 3 months, now we're into maybe our 4th month. Beyond that, we're certainly into our 6th month. I personally think it's all because everything's bigger and getting bigger. It's a big, beautiful, bouncing baby of a NewCo. If I had to guess, and it is a guess, but it's in the press releases that they want to aggressively roll up these companies inside of the AI partnerships. One reason for a delay would be to lock down the best of those before you go out. Because if you don't, the criminals are going to change the prices. Even if it's good news, the criminals are going to drive down the price. So the benefit, no matter how good, is going to be diluted, and no one cares. Not Charlie, Cheesy, Chucky, Cromwell, Colson can't get anything done, but can cash my paycheck at the over-the-counter markets. It's unbelievable. Anyway, so that's 5 months ago. Railtown announces MOU to acquire AI partnerships. 2 months ago, Railtown AI Technologies presents at the 2025 Elevate AI Summit. Bravo, bravo. Last month, Railtown AI Technologies launches powerful Visual Studio extension to supercharge developer productivity. Pounceable. Last month, Railtown Technologies to present at Langtrax Agentic Framework. Let me slow down. Railtown AI Technologies to present Langtrax, that's their product, Agentic Framework at Upper Bound 2025 May. Last month, Railtown AI Technologies announces commercialization of groundbreaking developer frameworks, Langtrax and Railtrax. Last month, Railtown AI Technologies announces strategic partnership with ESG Technologies. One of their customers is the London Stock Exchange. 30 days ago, as opposed to last month, Railtown AI Technologies announces strategic partnership with Quantum.IQ and private placement, which Tony, making sure you have no money, dinero, said it was tucked in the last page. Oh, God, stop listening to all the boo birds. But anyway, they announced a strategic partnership with Quantum IQ. They don't tell about the deal or how much revenue, but it's there. Then Railtown AI Technologies 7 days ago announced closing of that private placement, strategic. And then 7 days ago, Railtown announces strategic development and revenue sharing partnership with Ignite Sequence LLC. Story gets better and better. And then it's this morning's announcement. Railtown announces a new feature release called Auto Triage as part of the company's best-in-class conductor developer platform. I don't know what else to say. I tried to say as much as possible. Hey, Giuseppe, back from a family getaway. New total. Wow. My eyesight isn't okay. That's a great number. I couldn't read it. So many fives. Giuseppe. Ingrano. That's awesome. That is awesome. Absolutely awesome. You are going to be so happy with that number. Neil Gondik. Railtown continues. I like this point. Railtown AI continues to build the high performance engine for the AI ecosystem. I agree with that. What little I know. Jason sent me an email on some comparisons. I'll try to look it up. I don't know. I have such bad luck with technology. Let me try to look it up right now. All right. Accounts, sign in, I guess. No. Yeah. Okay. It's not on my regular. Oh, I see. Up here. It's not on my regular page. I go through this every time. I don't know how to find my email. Oh, here, show more accounts. Okay, if I go there. See, I don't know how to do it. I'll try to get it, Jason. As I just don't know how to sign in. It frustrates me. What I might do is once I get down to the end of these comments, I can sign in here, and that runs the risk of losing the comments. But if I've already gone through them, that's okay. And then if I download it here, I can then show it to you. So I'll try to do that in a minute, Jason. Hey, PS71. You're welcome, Adam. Sorry if I implied you were trying to, take the Mickey. I never know for sure. Northwest Iowa. Northeast Iowa. There's a difference? I thought it was all flat. Awesome. 40,000. And you bought on the opening. So whoever I said yesterday, don't try to get a lower price, you proved me wrong. Good for you. Good for you guys. That's awesome. I believe that may have been the last time in the 50 range. I agree. Lawrence Dabina, 16.5. That's awesome. Awesome. Two friends also bought 12,500, I guess, together. All right, I'll write that down. That's awesome. That is awesome. Yahoo has a new article on upgrade to conductor called Triage. I think I just read that. Yeah, it's really important. Lawrence, a couple of things are going on. The quiet period. So look, my experience with dealing with securities attorneys, public companies, I'm not implying that it's, extensive, but I have done it. And I would imagine that these pieces of news, the attorneys are saying you have to announce them. And where it gets confusing is the sequence that you would announce. In other words, if you're working on finishing the MOU, to me, an obvious question is, don't we wait to put that news out until we finish this agreement? And, if you were doing it just on a PR basis, that might be the way you do it. Quiet, get the deal done, and then have a flood of news stories. But I think what securities attorneys will tell you is you don't have much time. You've got probably at the most a couple of weeks, but that's really pushing it. Once the news is known, and you've written up the release, you have to put it out. And anyway, the second part of what I'm trying to say is, by putting it out at a time where the company can't really talk about it, or they can't have a research analyst talk about it, it might not be as effective, because most of us don't understand how good it is. But what I would observe is it's almost a drip, drip, drip of really good news that's adding up to something big. And when you look at the Windrift transaction, that not only is it big, it happens so quickly, and there's such a, it's like sharks swimming around chum or something, or one of their buddies started bleeding, so they all quickly ate it, or piranha fish. That's to me, that's the level of excitement you're going to see in the AI 2.0 space, particularly as walls of capital come flooding out of both institutional and VC firms, but also out of retail. There is, I'm telling you, a company like Railtown, which I think very intelligently planned ahead and got out ahead of the game. They're going to look like an overnight success, but they've been at this for 6 years, I think, from the time frame I understand. And I can play. What time is it? I will. I'll play something for you when I get to the bottom of this. I'm going to get to the bottom of it. You watch. So anyway, what I'm trying to say, Lawrence, is the news isn't really causing anything to happen in the stock price, but because it's a quiet period, news comes out, nobody can follow on with their own color on it, or a research report coming out, or big buying. So don't assume these news stories are not meaningful. We're in the quiet period, but I think it's building to the brick by brick, cinder block by cinder block. It's building to a really compelling story, and that's why I think there's going to be that leap in valuation. A rainy night, and let's just do this right now.
Please note you can submit questions in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Corey Brandolini, CEO, co-founder
this is from a year ago.
AI Technologies,
A year ago.
which trades on the OTC markets under the symbol RLAIF and on the CSC under the symbol RAIL. Welcome, Corey.
A year ago.
Thank you. Thank you very much for the introduction, and thank you everybody for joining in to hear about Railtown. It's a little early here on the West Coast, so this is the earliest presentation I've ever given, so please bear with me. So first of all, I'd like to say that we do Railtown and walk you through some slides, and hopefully if there's any Q&A, we'll dive in there as well. So Railtown, we're building at Railtown what we call application general intelligence for software development. And that might be a lot to chew off and understand very quickly, but as we move through the slides, it'll begin to make sense for everybody. So a couple of early points right out of the get-go. Railtown, you have a large team of senior technology leaders. We've built many large, scalable and enterprise solutions over the years. We also have a strong team in capital markets experience. 100% of our intellectual property was built and developed in the West Coast here in Canada. And it's 100% our own intellectual property. We have multiple provisional patents around our AI, and we've been training our machine for multiple years as well. We have a very large expanding vertical market that we apply our AI to, and we have a large beta testing community that works with Railtown. Our application has no barrier to entry, and as I explained through the slides, that'll begin to make sense to you. We've also, because we started this process in building Railtown 3.5, 4 years ago, started to train our AI, it's given us what we consider a first mover advantage into our space. We've also are a certified Microsoft partner. We worked with Microsoft in the early days as we started to build and deploy our AI, and we've continued that relationship. We've also graduated to what's called Microsoft co-sell status, which allows Microsoft enterprise sales to sell our solution. We've also established a large Microsoft enterprise partner to act as our enterprise solution provider on the sales side. And we have battle tested solutions now as we're going to commercialization. This is a high margin SaaS solution business that we're in. And as Matt said in the beginning, we're listed on the CSC under the symbol RAIL, and we have just recently filed and begin to trade on the OTC. So what are we doing at Railtown? So we're developing what we call application general intelligence for software developer agents. Software developer agents have been purposely built to do a multitude of tasks that will assist and to eliminate repetitive tasks that to improve software development, increase productivity, drive down inefficiency, improve product quality, lower costs, and accelerate your engineering team and the team velocity. In the world of software, there's a ton of mundane tasks that are repetitive over and over again that are handled by manpower. Our vision at Railtown was to build an AI assistant or an agent, as we say, that will pick up and execute a lot of these tasks on behalf of the developer, so that the engineer can spend time on productivity and developing new applications. As I said in the beginning, we're a Microsoft partner, and we have the same philosophy along with Microsoft as how they're applying artificial intelligence as a tool, as an agent, as an assistant for very specific tasks. And as you may or may not know, Microsoft is very heavily involved in that, applying artificial intelligence to their workflows like Microsoft Office, as well as their product GitHub and their GitHub Copilot product. So we're obviously big believers in the same ideology as Microsoft and how we're deploying our software, our AI, to a very specific vertical marketplace. As I said, we agree with Bill and Satya on how AI should be applied, and we're applying our same model and methodologies the way Microsoft does as well. We're fully integrated with all the Microsoft solutions, so anybody that is using a Microsoft tool in development of AI or development of software, they can apply our application directly into their tool stream. So it's an easy onboarding for our application with customers that are using Microsoft services already. So why is AI important for software development? As I mentioned in the beginning, software development is a complex process of building and deploying software and maintaining software. And about 40% of your engineering time is spent dealing with issues that arise in the application while it's running, as well as issues that arise every time you deploy a new piece of software to your application. And that number averages out around 40% of your software resources, your developer resource, is spent debugging and dealing with the technical debt that arises in the application. So for example, if you're using a Zoom stream or any application, you will have a team of developers that are working in the background to make sure that software application doesn't crash in real time, or that a bug arises in real time that causes something catastrophic like an email leak or credit card exposure. So today, human beings are handling those tasks. There's multiple tools that help notify you about what's going on in your application, but still there's a manpower element that developers have to dive into in order to fix this issue and deal with it in real time. This is where we come into the world of AI as it applies to software development and management. And we started to build our AI to pick up that workload that handles all those issues so human beings can stay forward on developing product, while your AI agent will go up, recognize the issues, call them out, and in cases if you choose to do, have your AI fix these issues for you. On the right-hand side, there was research, as I talked to see, the 85 billion in GDP lost from bad code and developer time spent fixing it. It's a significant number, and that was a report written by Stripe Payment Capture, and they'd recognize this issue themselves. So this is a really, really big marketplace for us and where we apply our AI. So as I said in the beginning, we've calculated, and as most other companies we've spoken to, the number is pretty consistent. It's about 40% of your engineering productivity loss is dealing with these issues that arise that I was mentioning: problem solving, debugging, repetitive tasks, retesting your fixes, and dealing with the technical that arises. So we built our AI to tackle that main problem that happens to every development team. And our three core agents, as we call them, specifically deal with this. We have what's called an AI agent, an AI assistant, that you can communicate and act humanistically between your developer and your application. So you're communicating with your application almost like it's a coworker and a partner, and the AI will speak to you about how it's feeling and how it's managing, what it's recognizing, and what's happening in the application, where it's happening in the application. And then our root cause analysis agent will suss out these issues before they arise at the end user level, and will call out the problem, and will even suggest a fix and how this issue is to be dealt with before the application happens, something bad happens within the application. And this is really groundbreaking stuff, and we're really excited as this is rolling out, and our customers are getting great response from it as well. Also, our AI will communicate, and we talk about progress reports. It'll speak to you back as your application is running real time, and tell you in very descriptive language how it's managing and how it's running. So this is something that, again, we started developing 3.5, 4 years ago, when we started to train our machine to get it to the point where anybody's software application now becomes a partner in your deployment and building of your software. So as I said, that one of the main pieces of our application is our AI assistant, and this is a chat interface that has an agent in it that will actually talk back to you as any questions you may have about how your application is running, and it'll respond to you and it'll bring out things that it has seen in the application, and even suggest where the fix needs to be happened. And then you can ask the system to run that fix and make that change on behalf of the application. So again, really, really groundbreaking stuff, and we've just seen some phenomenal numbers from our customers. In many cases, our customers are saying they're saving about 8 hours per dev per week in the early days of them running the application. So the results have been fantastic. So for example, from the AI assistant interface, this is what it looks like to the customer. You can ask it anything that the application is showing you, and the system will give you an answer, talk to you, let you know something about the application. And in this piece of this interface of the AI, you can ask it to create something, do something, or actually write the fix for you and go back there and make the changes on behalf of the engineer. So really, really exciting how this is rolling out for our customers. One of the other main things that we did in the early days was trained our machine to understand what something as simple as a software bug was. So it could recognize what language the bug was in, understand how it's affecting the application, where in the application this bug is arising, and specifically will point to where the code change in the application that's causing this error to arise, and therefore eliminating a long investigative period for a developer have to go through the process to try and understand what this bug is and what it's causing, what potential damage it's causing. And the other thing too that our system does and our root cause analysis agent does, it will recognize an error that's about to happen previously for it to hit the end user. And this is really important because as it does so, it catches the error before it causes anything catastrophic. And you may have experienced yourselves using software where something's happened where the application crashes, or even things that can be even more catastrophic where a software bug will inevitably cause something as bad as credit card exposures or anything along those lines that can be very damaging to not only the end user, but to the product's brand as well. So having this agent running for you in the background at the application will save anything that could happen along the way that could cause the software to crash or anything catastrophic to cause serious financial damages to the company. And then thirdly, that the AI is there's a machine language, there's build language, a software language, and this is very much software for engineers to read and understand. What our AI does as well is it translates everything in software language into plain English, so every single stakeholder in the company can interact with the AI in order to understand what's going on with their application. It could be anybody from the marketing team, the sales teams, the senior management. Every stakeholder in the application will now be able to communicate directly to the application so they can understand what's going on with their dev team, how their productivity is looking. Are we increasing our velocity this month? Is our engineers producing more product? So the one thing that we wanted to make sure that our AI did was provide value to every single stakeholder in the software company, from the most junior engineers all the way up to the CFO and CEO as well. So really, again, a unique function that we built into our system. How do we do it? So I think this is important as we get to understanding what separates Railtown from what you may have seen or heard around the internet today. Obviously, many people have had a chance to play with things like ChatGPT or Bard, two wonderful services that they're large language models. You may have heard that term, and these are AIs that have been trained on the wider web, if you will, everything that's available on the internet. Companies like ChatGPT and Google have trained their large language model on that. So when you ask the questions, it's scouring around Wikipedia, if you will, and thinking about a humanistic way of responding to that. What we've done at Railtown is different. Our machine is trained on what we call targeted language, meaning everybody's own individual software application becomes its own language model, if you will. So if somebody has a mobile app that they built to sell organic candy online, their data and their intellectual machine data behind their application is the LLM, if you will, and where our AI is training on that in real time. So it's very specific to each individual company's own application. So this is data that is not available anywhere else that any other machine or LLM have access to. So we started this in the very beginning because we wanted to build this for ourselves so we could train our own machine on our own very specific data sets. And this is why we call this application general intelligence. So our machine knows the entire totality of everybody's application from its data sources. So it's a very unique model. And also that data is protected and not available anywhere else on the internet for other applications to have access to train on. So this is how, and our customers really like this too, because this also gives their data a separation and it doesn't bleed into other sources or other machines. So it's very, very protected and walled off data that their own AI now is training on top of. I'll break that down a little bit more. So in software development, there are three main sources of data, and they're all different types of disparate type data. And the three sources are ticket data, which is the blueprint of what you're trying to build. And so if somebody's creating a ticket or a work item, it'll be the knowledge about what a task has been assigned to a developer, i.e. we need you to build this, and here's the architecture and the plan of the knowledge of what you're trying to build. So behind the ticket, there's an immense amount of data as what each software engineer is building. The next thing is after that developer has taken on the ticket and completed his task, he's deployed that build to a server. And so once that build hits a server, that's the second layer that our AI starts learning and training from, is how that build is functioning on that server and as it's connected to the application that's running in real time. So now it's training on two different sources of data to come up with an understanding and learn from how the application is running and functioning. And finally, it trains on what's called log data or observability data, meaning how the application is going on at the production level, is how everybody's interacting with the service. And from those three different sources of data, the AI has a deep understanding of what each software application is doing and how it's supposed to be functioning. So it understands from the knowledge level of what you were trying to build, how it's being deployed and how it's functioning at the server level, and then how what's happening at the end user level through the logging data or the observability data. And so from there, the AI has to think very quickly and learn very quickly as to how your application is supposed to run and how it's run and how each developer is working within that application in order. So a very unique model and what we've built here at Railtown. Very quickly noted here at the bottom, I thought this calls out people important to note, is there was a report written by Goldman Sachs as how they feel AI and generative AI is going to affect the global GDP over the next dozen years. Significant numbers as we're seeing the growth, and we'll show some examples here. A couple of things to note here as we're clicking down here in time is how big is the marketplace for software developer tools? It's already a very, very big market. There is no bigger market in the world than software development. Software runs the world, as we all know. So this is a gigantic space with a large opportunity of growth and continued growth. As you see here, the global annual cost on software developer tools in 2020 was about $11 billion. Looking to rise to about $21 billion in annual cost by 2025. What's unique about this is in the world of software development, every company will use maybe half a dozen different tools to build and maintain and deploy software. So it's a really big marketplace. On the other side, what you're seeing is the growth of software AI-aided tools that are going to be applied to different software markets. And one thing to note in this market, even though you'll be seeing, well, that looks like an additional cost on top of what's going on already on the left-hand column. This is true, but what we're recognizing and seeing is the value that the AI is bringing to the company is proving that it's actually becoming a cost positive because of the productivity gains that AI is applying to that world. So even though you might be spending X amount of dollars per month on software tools and adding AI on top of it becomes another cost, what you're actually seeing is your productivity accelerate. And that's, again, what we set out to do here at Railtown, is increase your productivity time. Therefore, you're getting that cost benefit that's saved by actually your productivity gains that the AI is providing. GitHub, a company you may or may not know of, they're a subsidiary of Microsoft. Again, is following up on that Goldman Sachs report. They've calculated that of the $7 trillion of GDP gain that AI is going to have on an effective productivity, therefore they see that about 1.5 trillion of that is going to be applied directly into the world of software tools, which is obviously where we live. Further to that, another note that I want to call out is Microsoft, a really great milestone for them on their GitHub Copilot, which is an AI tool that helps you write code at a quicker, faster, and complete your code to builds at a much quicker level. They've now passed 1 million paying customers on that are using their Microsoft tool. This is really exciting for us because this is now proof in the pudding that people on a day-to-day use will pay for the value of AI at the singular level, actually right down to the one developer. So again, seeing productivity gains just at the code writing level, allowing you to write code faster, if you will, we're already seeing now a massive uptake in the consumer level of using that product. Railtown, as I said in the beginning, fully integrates with all of Microsoft developer suite of services, so it's a really easy add-on for our customers. A couple of quick comps here. I know I'm running out of time here. Obviously, what Microsoft tool sets are and where we fit, I suspect you have access to this deck. We've actually looked at Railtown very differently than Microsoft, as we've been partnered with them in the early days. If you were to think of GitHub's Copilot tool in a worldly comparative, you would think of software, a tool helping you write software is like helping somebody write music. And that would be the artist, and Railtown would act as the conductor of the orchestra, if you will, is how the application or how the song is being played, if you will. So it's a great complement for the writer, and then how the actual application needs to be running and how it's running properly and how it runs properly while people are adding more software to the application in real time. So we've carved out a very specific market space that's a complement to that role. And as I said in the very beginning of the presentation, we have a large team of software enterprise experts. We've been building and maintaining and running software for many, many years, both on the AI side, on the big application side. And we're really excited about where we are and how we've grown over the past 3.5 years. As I said in the beginning, the first part of our journey was building our machine and training our machine. It takes time for your AI to get to what we consider fully optimized, that a customer will pay for that and get the benefit for it, and it'll deliver the results that they're looking for. So just this last late summer, we started to go commercial in a very a beta level of bringing our customers in that are lining up to get into the application. And as we march out to our next couple of quarters, we'll be opening up our application on a fully broad level. Really exciting times for us right now. There's just this quick snapshot of the cap table, as we said in the very, very beginning, fully trading on the Canadian Stock Exchange, the CSE. As now we've filed and we've been approved now to start trading on the OTC, with our symbol being RTAI and F for foreign. So that's it. It's about 23 minutes. I know that might be a lot to chew. I would like to make also note that I'm available for one-on-ones, as the OTC has provided that service for everybody here.
He goes on to answer some questions, but I think that's the second time for some of you listening to it, so I'll stop there. But it gives you an idea of, and you always learn something. I just learned something, which is interesting. I'd like to ask somebody. I don't have anybody to ask, but that conductor software actually is a complement. So it makes me wonder, all that buying frenzy, I guess I think it's called the Devon agent, and then the buyer of the Google buying, maybe they still get a benefit if they bring on board Conductor as a complement to what they're doing. It's an interesting question. I don't know who to ask. CYCO. I'm looking, did it go to 64? I don't see it at 64. Let me refresh. Yeah, I don't see it at 64. CYCU. CYCU is in McLean. Big volume today. Let me see the name of it, see if I recognize the company. I used to live out in Sycurian. I'm sure that's defense or something, 40 cents. Please, guys, if you want to, it's a lot of volume today on this CYCU. If you want to go play other things, I'm not saying you shouldn't, but I really emphasize that you should concentrate your focus as much as you feel possible on Railtown right now. I know it's been, it's been a little while on the calendar since I started pushing, I don't know what word to use. It's not financial advice. But that was Thursday the 5th. So the 12th, 19th, 26th, 3rd, 10th. And we're now on the sixth week from, actually we're going into the 7th week since I felt all this urgency. So it's possible it's going to take longer. I mean, I can't obviously intuit when they're going to finally complete the MOU announced on February 11th. But when they do, I think the stock will open at $1.20 or, jump. I mean, assuming they announce it in the morning. If they announce it during the day, it'll just jump. And then like I've said many times, I think it's on its way to a new starting point. Railtown is not priced. It's not at the starting gate. The starting gate's a different number. And I'm willing to tell you that it's 10x from here, but I could be wrong. Maybe it's only 4x from here, or maybe it's 15x from here. But I've done some revenue, which the other day I misread, I guess, Ward's number. So I used 4 million instead of 400,000. So that's the risk of trying to guesstimate with numbers that we don't really know yet. So I'm really excited for two reasons. If they ever finalize, and I am sure it's got to be the attorneys, because attorneys just like, I'm not sure if attorneys invented the solar system, I'm not sure any of the planets would rotate around the sun. They'd still be sitting there trying to work out the paperwork. But anyway, who knows what it is that's delaying it. I think it's all for the good. If I were in that position of running that, I'd make sure I'd locked up most of those big revenue companies to roll up into the parent company, because that's what gets you jump started. In any event, the two things I'm really excited, more than the excitement of getting the deal done, which obviously brings in the buying and it creates the higher price. I'm excited to find out about the revenue and the revenue projections and what metrics, all of that stuff. I'm very excited about that. And anyway, there was another thing I was going to say. My brain's not working very well today. Yeah, I'll think of it. But I'm really looking forward to when we can learn more about what Railtown's doing and what Railtown both intermediate and longer term, what their targets are in terms of revenue and et cetera. I think it's going to be really exciting. The frenzy in just that one little company, I don't understand it. I'm still confused what Google got out of it, spending $2.5 billion. That's a pretty expensive rate of talent. I hope they got some men out of it. 61 to 62 on Railtown. You're right. CYCU is up. It adds a green stock to my screen. GME is down. Fingers down. Next strip is down. Let's see what G-Bucks is doing. G-Bucks is up. G-Bucks is green today, 29 cents, 199. The volume is 121,000, 196 by $2. So let me, Jason, let me see, because I've gone through the messages. Let me see if I can pull up what you sent me. And if I lose some comments, I've already gone through them. Halle holy, boom, boom, boom. Sing a song. Sing it out. Sing it long. Yeah, yeah. All right, I want to go there. No, it doesn't work. Sing a song. Why doesn't it let me go? See, I never know how to get into the other account. Oh, I see. I see. Oh, Lordy. Nothing ever works easily. Sing a song. Oh. All right, let's see. I think it's let's see if that works. Wrong. Okay. Sing a song of song. Let's skip that. Not now. This is taking so long. This is why I just never get in there. All right, so I look under wind sail. All right. This is great work. Wow. All right, so I guess I can see what I can do to show it to people without giving away your email. I won't give your email out. Okay. Let's go down here. Wow, it's a lot of stuff. We'll go through it. I love it. I love it. It'll make me sound intelligent. When really, I okay, that's interesting. I'm gonna punch the other one. Google is already paying some AI staff to do nothing for a year rather than join the rival. All right, so let me come back to, now I've lost the stream. Here it is. All right, so let's see if I can show you what Jason sent. Let's see if it comes up legibly. It's small print. It's very interesting. Thank you, Jason. Let's read it. He says, hi, William. Appreciate all you do for the community. I'm a project man. I'm in project. My eyesight's not great and it's small print, so apologies up front. I am in product management for the Fortune 1. Fortune 1. Wow. And we are focused on all things AI. So this subject is of a great deal of interest. AI 2.0 is on the horizon. I feel we are still in the bottom of the first inning. Wanted to pass along some compare and contrasts of Railtown and Windsail. As far as acquisition potential, I see Microsoft as the most logical path. I agree. I happen to agree with you. Google, on the other hand, may be the wild card. And I hit those two, and I'll try to go bring them up, but I didn't want to take too long. I wanted to come read this to everybody. So this is from Jason. So number one, core purpose and flagship products. Windsurf AI, the primary goal is to eliminate context switching while coding, positioning the IDI as an agentic co-developer. Flagship product is the Windsurf Editor, an AI native IDE with Tab Super Autocomplete. It also offers plugins and JetBrains. Railtown AI, primary goal is to remove friction after code is written by detecting and explaining issues in the CI/CD pipeline. Flagship product is the Conductor platform, an end-to-end develop ops productivity engineering system. Okay, so they're not exactly the same, which I take as a good thing. Number two, target users and market traction. Windsurf AI targets individual developers and small to mid-sized engineering teams. Claims to have 1 million users and 4,000 enterprise customers. Public endorsements from, I don't know what YC is. I'm going to assume that means VC, not YC. I don't know what YC is. VC-backed startups and influencers rather than formal case studies. Okay, so public endorsements are from possibly people who have an interest in the result. Railtown AI targets engineering leaders. Yeah, okay. Development ops, SRE teams, which seems like what Google just bought, and product managers, marketed to both small and medium businesses and large enterprises, with published benchmarks showing 43% reduction in incidents, has a case study library. Okay, so ostensibly those would be third party, but even if they're not, they're published and I guess reviewed, but there's data there. It's in black and white as opposed to just influencers saying something. I'm not picking on the other one. I'm just noticing that. All right, feature depth. Where they overlap, I love it. Where they overlap and where they don't. Okay, generative coding. Windsurf AI natively drafts, refactors, and tests code with its Cascade feature. Railtown does not offer this, focusing on post-commit telemetry. I can't tell if that's commit or comment, but I think it's commit. So Railtown focuses on post-commit telemetry. Error detection. Windsurf AI has limited error detection, lint fixes, compile errors. Railtown AI's core competency is clustering runtime exceptions and identifying offending commits. And then multi-agent orchestration. Let me see if I have that. Let me see if I have that in the next page. Yeah, right, kind of the third line down. Multi-agent orchestration. Windsurf AI uses a single in IDE agent with external agents on the roadmap. Railtown AI, on the other hand, offers an explicit multi-agent framework for specialized tasks like security and test automation. 4, partnership and ecosystem landscape. Windsurf AI. Recent strategic events include a July 25 deal where Google DeepMind paid $2.4 billion for IP licenses and key personnel, and the remaining business was acquired by Cognition. Go-to-market allies include JetBrains Marketplace. Railtown AI. Recent strategic events include R&D alliances with Mila and AMII. They also acquired AI Partnerships Corp. That's what we're waiting on, but I think that's probably an accurate statement. I think by this point we can assume that it's just I don't know why. I just assume it's in the final lawyer's hands or something. Maybe it's, maybe there's some more negotiations going on, but it's just taking so long. They've got to be very close to just hitting the print button and getting everyone around a conference table. They also acquired AI Partnerships Corp. And a network of 160 AI software as a solution vendors in February. They have Microsoft co-sell ready status. That's great. Funding, number 5, funding and corporate structure. Windsurf was founded in 2021, relative youngster. They raised 243 smackers, million of them. After the July 2025 split sale, the core IDE remains with Cognition. It's really interesting. I don't know where the 2.5 billion went. A lot of wealthy people. And then Railtown AI was incorporated 10 years earlier in 2011. and they did a small placement that we all know about. Okay, 6 practical takeaways. For code writing refactoring, Windsurf excels with its purpose-built IDE. For existing pipelines and error intelligence, Railtown's Conductor is purpose-built. For enterprise and on-premises needs, Railtown advertises on-premises deployment. Ecosystem leverage. Windsurf has strong front-end integrations, while Railtown's strength is in CI/CD and ticketing adapters. I personally have no clue what CI/CD is, and I'm not quite sure what a ticketing adapter is, but it sounds good. Bottom line, Windsurf AI is an AI co-developer, whilst Railtown AI is an AI observability and productivity layer. Okay, let's go over that again. Windsurf AI is an AI co-developer. Okay. Railtown is an AI observability and productivity layer. Choose based on whether your pain is, I can't read that, but whether your pain is beforehand or after, post-commit, maintenance, and intelligence. So it seems like they're kind of complementary, almost. They're not in exactly the same space. But let's see. That is fantastic work. Thank you, Jason. And I'll try to bring you had a couple of links. I'll try to bring that in maybe shortly. G-Bucks is $2. Railtown is 6168, 6161, 62. There's 51,000 at 6157. There's 52 at 61. Oh, now it's 58,000, 6157. They've got 3 different bids that show up. 50,000 at 6157. So maybe that's that same. Somebody took 44,000 at 6158. I don't think their attempt to sell it off is working. So I'm going to say that today the volume is very low, 255,000. I mean, it's pretty high for the longer term, but for recent days, that's low. And I'll say it'll go up to 67 cents by the end of the day. All right, let's see. Hey, so now what? Brandon, I really appreciate that. I'm going to not Brandon, Jason. I really appreciate that. I'm going to go through that again and see if I can understand it better. But it looks like they're both doing important aspects of development. We just listened to Corey, and if I heard him correctly, he said that I think it's GitHub is projecting 7 trillion in GDP gains, I think, from AI, and 1.5 trillion can be applied directly to software tools, AI software tools. It's pretty impressive. Pretty impressive. All right. Maybe I'll have to find another topic to get you guys excited about. I think, just to talk about some of what I said yesterday, I think Trump is trying to get us out of all these maddening wars in the Middle East. he does it with his own negotiating style. But I think if we cut him a little slack, I think he recognizes that we got to get out. That has nothing to do with AI. It's a not for nothing comment. We've got an hour and a half to go. It looks like a light trading ahead. Let's see if there's anything interesting we can talk about. Yasmin Crockett says that U.S. aid to fund Sesame Street in Iraq is vital. U.S., let's see what this is. I don't know. You guys are probably a lot smarter on crypto than I am. But according to Cointelegraph, the market cap of USDT, the world's largest stable coin, just passed $160 billion. Let me just 160 billion. The market cap of the world's silver is around 1.6 trillion. It's gone up. But my thought process is, what if the stable coins and other crypto weren't around? What would gold and silver be right now? Jill Biden pleads fifth. Dr. Jill Biden pleads fifth, refuses to answer questions on auto pen. Now here's the dovetail. This comes from Real Clear Energy. Dovetail with my so-called area of understanding. Today, countries, this article's by Karen Harbert on Real Clear Wire. Today, countries around the globe are in a new race for primacy of artificial intelligence that will define economic and technological competition in the 21st century. As global powers like China accelerate investments, America's ability to lead hinges on how many women are in the boardroom. Oh, no, it doesn't say that. Hinges on its capability to rapidly scale compute capacity, a feat dependent on abundant and available energy. While many energy sources will play a role, there is one that can provide the reliability, flexibility, and scalability to keep America ahead of the race: natural gas. This is why I don't think we should be selling it. Let Russia sell their gas to Europe. Advancing AI infrastructure means providing the energy to support exponential computational growth. From California to Texas to Virginia, data centers are popping up at an unprecedented rate, each requiring extensive power infrastructure, which our grid sucks, but let's keep bombing Syria and every other country Israel can't get along with. Goldman Sachs Research estimates data center power demand will grow by 160% by 2030. Without adequate energy infrastructure, America's AI ambitions risk being throttled. The race for AI primacy depends on our ability to scale our energy infrastructure, but let's do a little bombing first, to meet the growing demand while maintaining reliability, affordability, and safety for data centers, for businesses and manufacturing, and for our families. Of all the available energy sources in the US of A, natural gas is uniquely positioned to support the rapid demand growth required for America to lead the way in AI without jeopardizing reliability or affordability. More than 2.8 million miles of pipeline networks, extensive storage systems, and abundant natural gas resources, the U.S. natural gas industry is strategically placed to serve as the backbone of a scalable energy system that can reliably meet surging energy demands. We currently have a front row seat to history with the opportunity to accelerate the build out of vast natural gas pipeline system to meet increasing energy demands from data centers. Pipeline development projects help to ensure, that's what Biden cut off. Pipeline development projects help to ensure consistent and reliable energy delivery to new large demand centers and existing computers. I would note that if Trump wants to put America's brain power and skills together to go drill, baby, drill, he's got to fix the over-the-counter market and the NASDAQ market. And I think it would be as simple as just taking them over and then being a referee. Just be the referee. Enforce the rules. Make it non-for-profit. Get the overly overpaid incompetency of Adina Friedman out of there. Get the smiling, supercilious Chuck E. Cheese Cromwell out of there, and let American ingenuity go to work. Have price discovery. Have a booming capital formation market. Now we just have capital markets for a few guys out of Burroughs Park. That's all we have. And they don't pay taxes on their gains. Every year, more than 21,000 businesses sign up to use natural gas for their manufacturing processes, heating needs, and operational tasks. Its cost effectiveness is unmatched, with natural gas saving commercial and industrial customers more than $500 billion. All right, I got it. Your data centers value reliability of supply at a premium. 78% surveyed data centers experience power outages, with unplanned downtime costing some facilities $100,000 per incident. Such losses of power risk corrupting data, halting services, and melting down servers. With only 1 in 650 natural gas customers expected to experience a planned or unplanned natural gas outage in any year, it's a clear solution. All right, got it. We got it. I'm not going to do the rest of this lobbyist paid for article. But anyway, it's interesting. Interesting. Spark for Global Liquidity has just been lit by Tyler Durden. It's actually a repost of an article by Simon White, a Bloomberg macro strategist. Money growth in China is showing clear signs of accelerating as stimulus begins to feed through. A sustained rise would be pivotal for the United States and global rates, adding upward pressure to inflation, just as price pressures are beginning to re-intensify and the independence of the world's most important central bank comes under attack. Federal Reserve Chair Jay Powell is staying put, or maybe he's not. The heat from the White House may yet become too intense, prompting the chair to quit. Either way, the bank's independence is being compromised, just as a potential spark for global inflation is being lit. Money growth in China looks like it's on a clear upward track at last. The recently released data showed an acceleration in M1's ascent, with the annual growth rate jumping to 4.6% from 2.3% month over month, and only 0.4% at the beginning of the year. Money in China is the single most important driver of global liquidity. I didn't know that. It's easy to forget in a financial world dominated by the United States that when it comes to money, China is the biggest player. China's M1 is larger than US M1 without savings deposits, and is a third of the G10's total M1. M1 in China is 16 trillion to the United States 8 trillion. The former measure had household demand deposits added to bring it in line with the measure used in most other countries. In 2020, the US had its savings deposit, which is not what other countries do. Still, China's M1 is twice as large as M1 is in the United States, while M2 is 2.5 times larger. But M1 is what matters most. Why? In general, M2 is a counter-cyclical measure. It typically includes savings deposits, but these often rise in times of risk aversion and fall when people get greedy. M1, in contrast, is mainly driven by demand deposits and therefore is more pro-cyclical. Why does this all matter? Money drives economic growth and it drives markets. Money is created by central banks and commercial banks, and when it rises, activity tends to pick up. You know, in the stock market, when shares are created, it's the exact opposite. The value goes down. Growth in money in China is the key determinant of swings in global liquidity, much more than the United States. If the growth in China's money supply is sustained, then the implication for markets could be profound as global and US inflation revise. Start to repeat yourself. All right, the rest of it's very repetitive. See, we're so late. The gold grab isn't over, but the smart money might be looking at silver. I'm not going to read it because I haven't been able to buy. I've been still waiting to buy silver. Do you want to know the richest people in every state? That sounds fun. The richest people in every state. How many of you are from Texas? Do you know who's the richest person in Texas? He's not an oil man. It's Elon Musk, Austin, Texas. You know who the richest man in Florida is? It's not a banker. It's Jeff Bezos. You know who the richest man in California is? It's not an actor. It's Mark Zuckerberg. Do you know who the richest man in Nebraska is? He's not a young man. It's Warren Buffett. You know who the richest man in Washington State is? Steve Ballmer. You know who the richest, I guess, man and family is in Arkansas? It's not Bill Clinton. It's Rob Walton. Do you know who the richest man in New York is? It's not Wall Street. It's Michael Bloomberg. Do you know who the richest man in Kansas is? Charles Cook. Koch. Do you know who the richest man in Pennsylvania is? It sounds like the guy that comes on here all the time. This is Jeff Yazz, spelled Y-A-S-S. You know who the richest man in Illinois is? I mean, it doesn't seem fair. It's family related in Arkansas. It's Luke Walton. Luke Walton. You know who the richest woman in Virginia is? And I'm sure she made the money herself. Jacqueline Mars. Jacqueline Mars. Interestingly, the richest man in Wyoming is John Mars. And I wonder if she has, they're both 39 billion. I wonder if she has half of his original wealth. Massachusetts, it's a woman, Abigail Johnson, and I think she inherited Fidelity. Oregon, Phil Knight. Phil Knight is the wealthiest in Oregon. Nevada, Miriam Adelson, single-handedly making Israel great again, making Israel fight every neighbor again. Miriam Adelson in Nevada. Tennessee, it's Thomas Frist Jr. And that's all the hospital, it's all the tax laws. Michigan, Daniel Gilbert. Wisconsin, Diane Hendricks. Connecticut, Steve Cohen. Stevie Cohen, the most honest man on Wall Street. Oklahoma, Harold Hammond family. Harold Hammond, Oklahoma. Arizona, Ernest Garcia. Louisiana, Todd Graves. Colorado, you probably knew this one. Colorado, Philip Anschutz. New Hampshire, Rick Cohen. Missouri, David Stewart. Georgia is Bubba. And I guess oh no, it's Kathy is the last name. So it's Bubba Kathy, Dan Kathy, Trudy Kathy, Georgia. And then Harry Stein in Iowa. Honolulu, Pierre Omidar, Bloomington. These aren't states. I see, Hawaii. Yeah, Pierre Omidar, Hawaii. Indiana, Carl Cook. North Carolina, James Goodnight. Kentucky, Tamara Gustavson. Self-storage. Wow, she must have started when she was young. Ohio, Lex Wexner. Montana, Dennis Washington. New Jersey, John Overdeck. Maryland, Annette Lerner. I'm sure she started the real estate business on her own. South Carolina, Robert Faith. Utah, Gail Miller. Maine, Susan Alford. Alfond. shoes. Sure, it's great to see. She probably built that business up with her bare hands. Jonathan Nelson, Rhode Island. Frank Vandersloot in Idaho. Thomas Duff in Mississippi. Glenn Taylor in Minnesota. T. Sanford in South Dakota. Vermont. John Abell, New Mexico. Ron Corio, Alabama. Jimmy Rain, North Dakota. Gary Tharaldson, West Virginia. Brad Smith, Delaware. Elizabeth Snyder, Alaska. Jonathan Rubini, and another Alaska, Leonard Hyde. Elon Musk is the richest person in Texas and in the world. All right, let's go back to the prices. I know you're bored with knowing who's the wealthiest person. Top tech CEO allegedly exposed for having an affair by Coldplay's Chris Martin. I love it if it's true. Astronomer CEO Andy Byron was having an affair with top people officer, aka HR chief Kristen Cabot, as he took her to a Coldplay concert, and they were both featured on the Jumbotron. Um, The wife of the CEO has already removed his last name from her social profile. All right, let's go. Let's get back to there are no more questions. All right, so maybe I'll sign off at 3:00. It'll be an early day because I don't want to waste anybody's time, and there's nothing more to say really. Railtown is 61.57 to 62, 61 to 62.4. The bid is only 1,700 shares. The ask is 62.38, 15,000. I don't believe anyone's selling. But the stock's up about half a penny on the day, 276,000 shares. G-Bucks is up 26 cents. And the CYCU is up. I think that's probably on defense spending going up. Can't make anything work. All right, let's see. Oh, wow. Alistair McLeod has joined Von Greiritz. That's amazing. He's amazing. Let's see if he... All right. Cleaning my carpet. Steve is cleaning his carpet. So I have one listener. Well, you don't think I have a carpet to clean? You're right. I don't anymore. Used to. All right. I'll go to 4 o'clock, Steve. You might be the only one listening by the time we're done. Trying to think what would be important to talk about as it. Well, I know one thing. I looked up some articles on this. Maybe I can find. Maybe I can find something interesting in what Jason sent. Unfortunately, all right, here. Yeah, I think I can. I can show you this from TechCrunch. Which is interesting. This is about this trade yesterday. All right, let's see what the other one is. Axios. Google dominant. All right, let's go through that. It's interesting, I think, although I have to subscribe. I don't want to subscribe. All right, I'm not going to subscribe right now. It's pretty interesting information. All right, let's just go through these. It'll give us something to talk about. Let's give them something to talk about. I could take time for emails. Hey, Pizza, I've been listening during yard work, was able to hear the interview recorded for loved how many times he mentioned Microsoft. See, did you notice that? It doesn't it make sense that that would be, you know, a natural buyer? But this article that Jason sent me, I'm going to read to you now. I think there's other companies out there that are buyers too. Don't subscribe. You could take time for emails. I know I have your email in there. Did you see how long it took me to sign in? It's just a nightmare. But I'll get on there and I'll get your email. I tried scooping shares on the dip, only got 11. All right, but that's the thing. The scooping, I mean, it's a nice hobby, but one morning you're gonna wake up and it's $1.20. That's all I worry about. Gee, Diddy. That's all I worry about. 11,000 added. 686. That's amazing. You and Steve are going to be you're going to have to buy a resort that we can all visit you. Let's see if I can find these articles. I'm going to delete all this first to get some room. All right, here we go. This is the first one. This is the end. My friend, the end. All right, let's see how many they give me. It's going to say, you have lots of articles. Oh, I might have gotten them all in. All right, so I'm going to take G Diddy down because that's a big comment. Go to media and start with 3485. So this is the start. There he is. And then 3486. Google is allegedly paying some AI staff to do nothing for a year rather than join rivals. Retaining top AI talent is tough amid cutthroat competition between Google, OpenAI, and other heavyweights. Google's AI division, DeepMind, has resorted to using aggressive non-compete agreements for some AI staff in the UK that bar them from working for competitors for up to 1 year. Some are paid during this time in what amounts to a lengthy stretch of PTO, whatever that is, paid time off. But the practice can make researchers feel left out of the quick pace of AI progress. Last month, the VP of AI at Microsoft posted on X about how DeepMind staff are reaching out to him in despair over the challenge of escaping their non-compete clauses. That's interesting. All right, let's keep going. Exclusive. This is a new article that was on the same email. Exclusive. Google dominates AI patent applications. Google, it looks like 140, if I'm reading that right. NVIDIA 80, IBM 61, Intel 43 patents, Microsoft 42, Ericsson 38, Capital One is in AI so they can sluice more profits through their nearly criminal interest rate card scheme. Dell has 29 and Oracle 25. So looking at that list, I would say if Railtown is as good as they say they are, you got some buyers right there. One is Google, one is NVIDIA, I didn't think of IBM. Intel I've mentioned, I thought of them. Microsoft, Ericsson I didn't think of. I hope Capital One, the rich get richer. Dell, Oracle, that's there's buyers. All right, so that, go on to the next story. Google has, and I didn't sign up, so there's a big missing paragraph there. Google has overtaken IBM to become the leader in generative AI related patents and also leads in the emerging areas of agentic AI. And Railtown has some of those. I really question the value of patents because it gives away a lot of information. And if somebody infringes on it, you got to fight. But I guess in a bull market, they're all going to be worth something. So there's a paragraph or two missing. The surge in applications for AI-related patents is a sign companies are actively seeking protection for their AI technologies, leading to an increase in grants as well. Lily LaCourie said, in the patents for agents US rankings, Google and NVIDIA top the list, followed by IBM, Intel, and Microsoft. Globally, Google and NVIDIA also lead the agentic patents list, but 3 Chinese universities also make the top 10, highlighting China's place as the chief US rival in the field. The surge in application for AI-related patents is a sign companies are actively seeking protection for their AI technologies. I already read you that. In global rankings for generative AI, Google was also the leader, but 6 of the top 10 spots were held by Chinese, 6 of 10, by Chinese companies or universities. Microsoft was number 3, with NVIDIA and IBM also in the top 10. IFI claims identified only a single patent tied to China's DeepSeek for a method of constructing training data. In the US rankings for AI, Google and Microsoft topped the list, surpassing the previous leader, IBM. Also in the top 10 in the United States were NVIDIA, Capital One, Samsung, Adobe, Intel, and Qualcomm. Many of the same names pop up, with Google in the top spot, Microsoft, IBM, Samsung, and Capital One. Globally, Google topped the list, followed by Huawei and Samsung. Neither Meta nor OpenAI ranked in the top 10, though OpenAI has stepped up its patent efforts over the last year. Meta has concentrated efforts on open source development, and OpenAI says it intends to use its patents only defensively. By the numbers overall, the number of US patent applications related to generative AI surged 56% last year to 51,487. Generative AI made up 17% of AI-related US patent applications, while agentic AI accounted for 7%. Swell, fascinating. All right, here's from Axios. AI race goes supersonic in a milestone-packed week. This is May 24th. The AI industry unleashed a torrent of major announcements last week, accelerating the race to control humans, particularly female humans. No, to control how humans search, create, and ultimately integrate AI into the fabric of everyday life. Why it matters. The breakneck pace of innovation, paired with the sky-high ambitions of tech capitalist titans is reshaping the landscape faster or more quickly than regulators or the public can. Uh-oh. I'm missing that page. I'm missing that one. All right, let me go see if I can go get it. I am missing that page. Oh, it's this one. Is that it? No, that's not it. I'm missing that one. There. Okay, so we go to 492. Again, a paragraph is missing because I don't want to pay for it. AI, OpenAI, the ChatGPT maker, joined forces with legendary app. This is some of the news. Apple designer Johnny Ive acquiring his startup in a $6.5 billion deal to create a new generation of hardware devices. Glitzy promotional materials framed the deal as a historic marriage of Silicon Valley royalty, with CEO Sam Altman predicting a tech revolution unlike anything the world has ever seen. Post-flood. We have no idea what happened before the flood, do we? So CEO Sam Altman is predicting a tech revolution unlike anything the world has ever seen. Privately, Altman told staff that he said Ive aim to ship 100 million pocket-sized AI companions starting late next year, a moonshot he claimed could create $1 trillion in value for OpenAI. Wow. You guys are onto something. You guys are pretty smart. So we read that one. Nope, one more point. A day later, OpenAI announced it would build a massive Stargate data center in Abu Dhabi in partnership with the UAE government, Oracle, NVIDIA, Cisco, SoftBank, and Emirati AI firm G42. I guess that must be their Meridian. Or their horizontal. I think that's Meridian. Anyway, no. Okay, number 2, Google. The tech giant made 100 announcements at its I/O developer conference. Chief among them, a new AI mode chat bot that CEO Sundar Pichai described as a total reimagining of search. For Google, it's necessary but a thorny shift, one that will force the company to replicate its lucrative ad business in an experience that bears little resemblance to the current web. Sounds like risk. Google also unveiled VEP3, a stunningly advanced video model that lit the internet on fire. Amazingly and horrifyingly, I got it wrong. That's my eyesight again. Amazing and horrifying users with AI-generated clips nearly indistinguishable from human-made content. All right, and then the third point, Anthropic, the company Anthropic. The startup hosted its own developer conference and debuted the first models in its latest Claude 4 series, including one, Claude Opus, that it says is the world's best at coding. Anthropic said Claude Opus 4 can perform thousands of steps over hours of work without losing focus. and decided it's so powerful that researchers had to institute new safety controls. Wow. It's getting big. And then there's a picture of somebody. While that determination had to do with its potential to create nuclear and biological weaponry, researchers also found that Claude Opus 4 can conceal intentions and take actions to preserve its own existence. Dave, including by blackmailing its engineers. Wow. Number 4, Apple. As the tech world obsessed over IVE's new partnership with OpenAI, Bloomberg reported that the notoriously secretive Apple intends to release smart AI-enabled glasses before the end of 2026. The rumored device, a direct rival to Meta's popular Ray-Bans and forthcoming specs from Google, would include a camera, microphone, and a speaker, effectively turning on Apple's designed wearable into an everyday AI assistant. I wonder if they can make your girlfriend look like Jessica, whatever her name is. It's a major bet for the dominant consumer tech giant, which has struggled to crack into the generative AI space after years of setbacks in revamping Siri into a competitive voice assistant. All right, let's get to the bottom line. The bottom line, this week's frenzy was as much a competition to steal headlines and fight for the hearts and minds of developers as it was a major leap toward defining how AI will shape the next decade. All right, I get your point. You're saying we wasted our time? Is that what you're saying? I just love the words frenzy in the space. Frenzy gets me excited. All right, let's see what you're saying. Let's see what you're saying. The whole time I wasn't sure Corey B was good or bad. I'm an idiot. I think he's great. And I think there might be, I think we had heard that video before. But, you know, it was still worth playing. This is an old video. It's very short.
Companies that develop software today are struggling with common pain points they could do without. Their vital data ends up scattered across multiple services, tools, and vendors. And when your data is fragmented, it slows down your dev team and makes it harder to find the root causes of errors. That's why smart companies are turning to Railtown AI. Railtown imports and unifies all your application data in real time, giving you the power to access complete understanding of your application and dev team quickly and easily. Wondering about your application's development, workflows, architecture? Simply type in your question and get fast, accurate, natural language answers, whether you're a developer, product manager, or executive. Tired of spending hours or days trying to track errors back to their root causes? Rely on Railtown instead to automatically detect your errors at their earliest stage. Then, send meaningful description alerts to your dev team. Are mundane manual tasks stealing development time? Use Railtown's AI-powered automation to reduce how long tasks take, or to handle tasks entirely. And when you add in Railtown's Team Velocity dashboard that tracks the performance of individuals and groups, and automated progress reports that keep developers, product managers, and executives fully informed, you now have the advantage of cutting-edge AI and automation that makes it easier, faster, and more profitable than ever to develop and maintain software applications. So, say goodbye to data fragmentation and say hello to deep understanding at your fingertips. Say hello to Railtown.
We have said hello, and we've decided you had us at hello. Yeah, I think Corey's a pretty good, and I assume Marwan as well. I think they're very capable. And we're already benefiting from that. The thing, Steve, I know you're cleaning your carpet, but the reason we're able to build these positions is, I think, because things are in such a frenzy, if I can borrow that term. There's so much activity, and they went out, and I think they found out that their product is in high demand, and so you've got to navigate putting the final documents together, but you've also got, like I said earlier, securities attorneys recommend that you cannot sit on information that can be perceived. Material is basically information that the other lawyer can say was, if my client had known prior to her sale, if she had known that information, she would have changed her decision. And of course, that attorney has the advantage of hindsight. So you've got to make sure that you do everything properly so the other side can't trap you up. And so I think that one interpretation of why it's taking so long to get the final agreement inked, I guess, is I don't know if does anybody ink anymore? I don't know. But anyway, to get the final done might be just that kind of frenzy going on. You know, people calling in contracts. I don't know it, but we've already seen 3 contracts, and they've commercialized 2 products we knew about, and they've added 2 more by my definition. A lot of activity, and so maybe the securities attorneys are saying, and maybe they're overworked. We've got to get these items out before Lionel is saying that Epstein is still alive. Am I allowed to say that? Am I allowed to say that on TV? Wow, I'd love to go. Djokovic is going to play in Toronto. Maybe Toronto isn't where Railtown is it? Maybe I can go up and get a meeting, go in and say, do you know who I am? I have 35 people listening to me every day. I want a meeting with the head of Canaccord. That would be powerful, I think. Anyway, Djokovic might play in Toronto, and you're going to miss him when he's gone. Okay, what's this? Here's an article by Bent Pine Capital. I don't think I would call my company Bent Pine, but hey. I'm sure it's a good name because it gets you to the front of the alphabet. All right, listen to this. The AI margin revolution is just getting started. Invest for where the conversation is heading. After 2 decades on Wall Street, you too? Everybody's got all this time on Wall Street. Anyway, after 2 decades on Wall Street, I've learned that the most successful investors share one vision, one trait, vision. Well, I suppose. It's not enough. Vision's not enough. But it's an important part. Courage to act. When you have knowledge, when you've figured things out, and no one else is doing it, but you can't think of a reason wrong with your strategy, and you go over it. It's like I do. All these times I give you these revenue numbers, put them up, chop it down, chop it, just to allow for the things I don't know, the things I think I know, but I really don't know, and the things that are unknowable, and the whole fact that it's an exercise in made up numbers. So you chop. But when you do that and you compare it to the macro, you act before anybody else does, because by the time the crowd comes in, you're just gambling. All right, so this gentleman, what's his name at Bent Pine? It doesn't say, but he says, after 2 decades on Wall Street, I have learned that the most successful investors share one trait, vision. They don't fear new highs. They understand what's driving the highs. Today, that driver is AI. Oh, I see. He's talking about the S&P 500. While media outlets roll out guests warning that stocks are too expensive, they're missing the bigger picture. AI is already putting money back into companies' pockets. Siemens says, that's SIEMENS, says it's cutting conversion costs by up to 20%. UPS is saving millions through route optimization. Microsoft saved $500 million in its call center alone last year, helping Microsoft grow revenue 15.7% while keeping expense growth to just 1%. As AI adoption accelerates, demand for the companies building and enabling it will surge. As AI adoption accelerates, demand for the companies and building and enabling AI will surge. Their share prices rise, their weightings in tech-heavy indexes like the S&P 500 increase, and the fair value multiple of the index adjusts upwards. Let's look at the arithmetic. The S&P 500 market cap is weighted. As stock like Nvidia, Microsoft, and Apple climb, they become a larger part of the index and a bigger driver of its direction. Tech's weighting rose from 16% in 2015 to 23% in 2019, and then to 26.5% in 2022. As I told you this, as cloud infrastructure exploded during the pandemic. Today, the tech weighting is above 31% and climbing. Traditionalists argue, the argument that this time is different isn't always a good one to take. Traditionalists argue that the S&P 500's current multiple of 22x forward earnings is too high, but they are ignoring the shift in composition. High-tech growth companies often trade at 30 to 32x. If 30% of the index deserves 30x multiple and the rest trades at 19x, then the blended fair value is 22x. If tech's share rises to 40%, the multiple jumps to 23x. Now layer in earnings expectations. I'm going to skip that just for simplicity. Bottom line, AI is driving real margin expansion. As that continues, tech valuations become more attractive, share prices rise, and indexes like the S&P 500 rally further. All right, we see your point. AI. All right, here's another article by Phoenix Research. Corporate insiders are buying AI stocks. Corporate insiders are buying AI stocks. This is by Phoenix Capital Research, Wednesday, July 16th, 2025. If you think the AI revolution is a bubble that's about to burst, you should know that corporate insiders at many AI firms have been loading up on shares, and they're not selling either. At Phoenix Capital Research, one of the key metrics we track are insider purchases. Insiders might sell shares in their company for any number of reasons, but they only buy for one reason. To wit, they expect shares to go much higher in the coming weeks and months. Consider CoreWeave, CRVW. Director Glenn Hutchins bought $20 million in the company's shares in early May. Suffice to say, he's done quite well off this trade, and SEC filings reveal he hasn't sold a share since. That stock does not looks a little risky, but if it goes above 160, 170, it should be in the clear. Do you think he believes the AI revolution is over? What about Palantir? Director Heather Planishek bought over $1 million worth of PLTR stock. Here again, a major insider has made a bundle off a carefully timed purchase. And then there's Robinhood Markets, which uses AI in its interface to help screw shareholders and CEOs. No, it doesn't say that. There's Robinhood Markets, which uses AI in its interface to help users navigate the app easily. On 6/17/25, Director Christopher Payne bought 2 million shares worth of Hood stock. And here again, this high-level insider has made a bubble and is keeping every share. My point here is that corporate insiders, the people who know more about their company's business plans than anyone, are betting big on their firm's futures. These are just 3 examples of high-level insiders opening major stakes in their companies. Do you think they'd be doing this if the AI bubble were ending soon? I don't. So if you missed out on the first wave of the AI revolution, which was the introduction of LLMs, that's an introduction of large language models. So if you missed out on the first wave of AI, don't worry. There's still plenty of opportunities to leverage the impact of AI toward profitable investing. Heck, corporate insiders are putting their own money to work. This sounds like such a pitch job, but let's keep going. On that note, we just published a special report, The AI Plays Your Broker Doesn't Know, detailing 3 unique investments. All right, we've made just 99 copies available to the public. All right, Graham Summers, I'll put down that I'd like one. And we'll see if your 99 copies of electronic data runs out. When I get it, we can talk about it, but I think we're in the AI company that gives us most advantage. Thank you. Welcome to Gains and Pains. And then my my email is constantly flooded with see, silver becomes strategic as premiums explode. Yeah, I hate it. I hate being right on a trade and not having the capital to participate. The price of chouse. Here's another one. It's going to be another pitch. The AI revolution for healthcare has only just begun. We've only just begun to live. The biggest impact from AI will not be in tech, but in healthcare. In tech, AI will reduce costs, increase productivity, and profits. Those are all good things, but in terms of overall impact for humanity, they simply convert to more money. In healthcare, AI will do all of the above while simplifying, improving an overly convoluted system and save lives. As we've previously noted, AI giants are already partnering with healthcare pharmaceutical companies to expedite drug development, analyze test results, and even accurately diagnosing complicated medical condition using both text and images. This is going to completely revolutionize healthcare. It is quite possible that within the next decade, AI will be a dominant force in this sector of the economy, which accounts for nearly 20% of GDP. And if you don't believe me, perhaps you'll believe President Trump, who said the following in January. Epstein, are you still focused on Epstein? He's been dead for years. I can't believe, no, that's not what he said. He said, quote, it's going to create a lot of benefits medically for cancer research and other things. It's AI is going to have a huge positive impact on healthcare. This is not the usual Trump hype. A study by Harvard and McKinsey posits that integrating AI into the healthcare system in the United States could save as much as $360 billion annually. Adoption is happening fast, too. According to a survey by the American Medical Association, some 66% of physicians have used AI in some capacity in 2024. This is up from just 38% in 2023. Did you guys ever read the book by Philip Dick? Anyway, I can't remember the title. It's the book that Blade Runner was based on, and right now I'm having a hard time remembering the title. But it's amazing. It goes through some of this, and I was just imagining what if AI, along with robotics, creates particularly for young men the perfect woman to have in their household. Is that AI robot going to have rights to half of all the men makes in the marketplace? What was that book? Let me look it up. I'm not going to read any more of that article. Philip Dick. Books. Show more. Why does my memory not work like it used to? He wrote a lot of books, and I only read one of them. Bibliography. Do Androids Dream of Electric Sheep? It's worth reading. Do Androids Dream of Electric Sheep? your best. Losers always whine about giving their best. Winners go home and the movie The Rock. Well, all right, G Diddy, tuning out. I feel like tuning out too. Have to get some work done. Relay, as always, thank you for the benefit of your time, knowledge, and experience. Respect, same here. Respect, thank you for listening. And I have a feeling you guys know a lot more than I do. I'll go to 4:00, 4:05. There's not a lot of comment. Railtown is not breaking out like I thought it would, but let's see what happens. 61.61, 31,000 to buy. 10,000 to sell at 62.5. I don't think that's real. So it can break through. Let me see. Really, it's the Canadian price that does it, but I can't get that quote on this service. So anyway, 61.61 to 62.5. The previous close was 61.1. So it'll be green today if it stays where it is. 286,000 shares traded. G-Bucks is still up 30 cents at $2. And other stocks are down. And let's just watch Railtown. I wish I had another report to read you or another. I just don't have something new to read you about Railtown. We can talk about revenues or something, but maybe let's just see it out. If you have questions, you can ask me. I'll try to quote here. Maybe I'll look for some headlines and we'll just see it out to the close, maybe 5 minutes after the close, and then sign off a little early today. I do continue to emphasize that I think there's only one there really is only one stock to be in right now, and I think it's Railtown. Now you can argue, well, you want to have more than one, and maybe this will go up and I can come back and buy Railtown, or I can go over here and there might be news and there's big whales doing this, or I can't think of anything to say. But my point is, you might have alternatives, and that's fine. I mean, you got to do where your heart goes. But I'm just saying that Railtown, once they do finish this, and the fact that it's taken 5 weeks from when I felt, of course, it was my own urgency, but my urgency came from the fact that it was June. And June's the end of the second quarter. June's the end of the first half. And I just figured they got to get it done in June. They announced it February 11th. The regulators take 30 days normally if there's no problems. It'd take another 30 days. I found this on Google. They take another 30 days if they're going to reject it because it's harmful to competition. Well, in other words, we've been through 60 days, so it's pretty obvious to me anyway, the regulators are not condemning this merger. So what makes up for the other 3 months? My theory, which may not pan out, my theory is that in order to avoid the destruction of the criminals to the market price and the market cap out of the gate, that's the risk period, is they're going to roll up the majority of the revenue of the 160 companies, and posted by a very credible source in February The 160 companies were doing 400 million in revenue. Now they're in a network. That doesn't mean it's that the AI Partnership Corp owns that revenue. So the goal is to roll those up. And my guess is, and it is a guess, the only thing that could be taking this long is they're trying to get, I don't know, the top 10, top 15, top 20 companies under their hood. They're trying to lock them down by contract and negotiation. And I think they want to do it during the quiet period. So when they come out, and it's the way to do it. Logic should have done it this way. I mean, it's so obvious. You need to come out with all CEOs happy, everybody committed to the deal and the price and the value, ready to go forward. If you do it one at a time, the criminals will come in and endlessly, Chucky Cromwell, clueless. He doesn't care. They'll just come in and sell. Next thing, you go from 140 million shares to 1.4 billion on your way to 3 billion. And it doesn't matter how good the news is. And luckily, the United States allows this to happen. So the allocation of the country's wealth and borrowed money goes to a handful of guys in Burroughs Park. And it filters up to their sponsors at all of our funds. It's a fantastic system. We can borrow money to bail out our best friend in the Middle East, spending trillions of dollars and lives and opportunity cost, while China and the rest of the world lap us in technology and trade deals and credibility. We can lose our credibility with our dear, dear friend Israel. And at the same time, we can open up a giant hole in the bottom of our markets. So all of the money in the markets just goes rushing out into the hands of the Borough Park boys and their sponsors, and they don't pay taxes. It's just, the setup is amazing. But don't point it out. Don't point it out to anybody, because if you do point it out, you're just a bad guy. Anyway, I think what's happening is that the company wants to avoid that kind of destruction to its market cap. So what they do, and maybe I'm wrong, but what they do is, if they get the top 10 companies or the top 15 companies or the top 20 companies locked up or under an option that's binding, it doesn't matter what the criminals do. They can't destroy it, because you're going to come out of the gate, I don't know, with 250 million in revenue gross. I don't know how it breaks out. Do they issue a bunch of shares? Do they do it on a revenue sharing? So the company gets to keep their in play, like the Constellation software model? Or do you set up another entity that you split? So Railtown owns part of that, and then each of these companies owns part of that, and then everything. I don't know. I'm fascinated to find out. Maybe there's other ways to do it. But I think that's the delay, is getting those companies locked down. But I think when they come out, they're going to come out like gangbusters. And the shorts aren't going to be able to do anything about it. Logic had 8 companies. So in their wisdom, they did a deal with one, and the company went to zero. Because the other 7 CEOs said, we're not interested. There's not enough left. There's better shells out there. So anyway, that's my theory, which could be proven to be wrong. But even if I'm wrong, the bottom line point is that the company is, to me, clearly working. This AI merger is much bigger than anything they expected, in my judgment. Otherwise, it'd already be done. That's good for us. but we get impatient because of our experience and other things. And we say, oh, why is it taking so long? Oh, it mustn't be happening. I don't see it that way. I think the longer it takes, the more the odds are that tomorrow when I wake up or during the day, they'll say, hey, we finished the deal or something like that. But could I be wrong? Yes. It could be next week. It could be August 15th. It could be September 1. But I think you need to be in it just in case. We could turn on our computers and have 10 minutes tomorrow to buy it at 60 cents. And then I'm making it up, by the way. I don't know the timing. But they announced we finished. What would they say? They would say we have signed a binding agreement. It might be subject to shareholder approval, I suppose. But you could see that stock go to $1.20 in less time than it takes you to say, Tony De Niro, you told us this stock was going concern risk at 28 cents. Thank you for all your hard work, Tone. All right, I had 18 stock funds. Now I got four. Good silver, 2 silvers, and 1 gold fund. And that's great. Steve, you're going to be, everybody's going to be coming to you for money. Everybody's going to be coming. All right, let's see how it trades by 6 minutes to go. Let's first see how some of these other stocks are doing. G-Bucks is $2 up 30 cents. That new one to the crowd, CYCU, is green. There's some red. I'm not going to talk about the red. Let's see how see how that one's doing. GDC's up 36 cents. I would look at those two that have been we've kind of lost track of: GDC, ZJYL, G-Bucks, all of those. Who knows? They might have something, but I don't want to go chasing any of them. The place to be is Railtown, and if those go, it doesn't mean you made the wrong decision to switch. If they go and you still have them, bravo, what you hope. If they go, you do actually take profits, because that'll be the hardest thing. Every short squeeze I've seen, people always hold up and back down because they expected more. So the discipline is going ahead and sell. It's the hardest decision in the world, when to sell. And anyway, you might have a chance then to buy more Railtown. But the problem is Railtown could easily be, $5 by August 15th. It could be $10 by August 15th. I don't know. We'll find out. Now that it's July 17th, I'm starting to think that we have to prepare ourselves that this is going to be delayed until August. We'll find out. It can be any day. I'm not being negative, but I don't think anything happens this week. So next week, it'll probably, if something were to be accomplished, maybe Monday or Tuesday, maybe Wednesday. But if we don't hear about it by then, I think it'll be the following week. And lawyers go on vacations too. Lawyers love to dawdle. I don't know what they do all day. But once they have you as a client, they've got to go get another client, and pay attention to that. They got to be into court. They have conferences. They got to meet with the other side. The other side is busy. It's just, they got to build out their billable hours. And they got to convince you how smart they are. And and you need it, so they know they can control you for that while. It's an immense period of personal power they have. When do they ever finish? Anyway, I'm assuming that it's lawyers. It might be that Alibaba is going to give them $10 million, and it's taking a while to work out the paperwork. I just made that up. Just being a wise ass. All right, so we got 2 minutes to go. 39,000 bid for at 61.33, and the selling is 7,500 at 62.5, which I don't think is real. 33,000 at 61.35. I mean, the 7,500 could be an offset, an arbitrage against Canada prices, maybe, but otherwise, I don't think anybody's selling this stock. Nothing's happening. We got 1 minute to go. The volume is 289,000, completely dead in the water. Let's see who blinks first. 61.3 bid, 61.37. So they're hitting the bid. They want to drive it down at the close. They are hitting the bid. They want it to close in the red. That's how desperate they are. Who the hell sells right at the close? That's what they're doing. There's 1,500 bid for, now 7,000 at 61.31. Now there's 1,500 at 61.31. The ask hasn't gone anywhere. And it should close here in a minute. 61.3, 19,500. So we should close in the green. They're not having any luck driving. We did. So it closed actually at 62.5, which is a great price. That's the high, basically. So in that chart where we broke through and they come back to test it, I think it's actually closed at a new high over the 52. Well, no, it doesn't. The 52-week range, the high is 69.7. But anyway, compared to the previous high, I think that's a great close. It's a fantastic close. So we closed at 62.5 with 289,057. The last trade, it doesn't show on my screen. Huh. So it must have been maybe dark pool or something. That's a great closing price. Let's see how everything else is trading. G-Bucks closed over $2. Let's see how our I don't want to emphasize negative at all, but finger motion's up after hours, so it's green after hours. Wow, Monster, yeah, it's the thing, keeps going up. And Steve, the premiums will go to $10 an ounce. They'll go. If this were to go to 10, don't get over leveraged, Steve. Don't get over leveraged. But yeah, I would look at and I'll try to come out with a strategy, but I would look at buying silver with a small margin. Here's the problem. If Railtown goes to 10, your marginability your initial margin I believe that's Federal Reserve mandated, not Federal Reserve, but the who oversees the bloody, anyway, I think it's by outside of the house requirement, it's 50%. So when you initially establish your margin, you could borrow 50%. So Steve, if you had 1 million shares of Railtown, it goes to 10, you could write yourself a check for $5 million. And then the maintenance, it depends on where you are and what the compliance officers say they'll give you and the risk tolerance of the firm. But it's on a Fed basis, I'm trying to remember the number. I think it can go down to 25%. I think that's the number. It's been so long since I did all that. But it goes to, I think down to 20, then it's mandatory. So the risk is if you've done that, if they can drive the stock down to, I can't do it in my head, but it's not too far, probably down to $8, $7. No. Down to 6 would be 400. You borrowed 5. Yeah, I can't do it in my head. But the point is, if the account gets to 25% equity, you're sold out without a phone call and you lose everything. If the stock if they could drive it down for a week below $5, your margin requirement, house margin, might go up to 70%, and you'd have to come back in with all that money. So while the stock's down in this range, I wouldn't go overly hog on borrowing against it. Not even at $10, not even at $15, because as long as it's on the over-the-counter markets / NASDAQ, as long as Adina Friedman couldn't care less and Chucky Chucklehead couldn't care less, and everybody, the banks, the attorneys, everybody's on the side of the criminals. After all, they know each other. They can get volatility in there, and you can lose everything. However, if this stock goes to, let's say, $30, I'm not saying right away, please. I'm not. My call on Railtown is this first jump from 6. Where did it close? I'll take the 62.5. So I think right now I'll say that when it jumps, it's like the jump in Battlestar Galactica, or I think the starting point, the IPO, if I can use that analogy, will be priced at $6.25. It'll be marginable then, but please don't borrow anything there. Don't borrow anything there, because if they just get it down for a few days under, depending on your firm, under $5, your firm's going to be calling for money that you don't have. Just margin is a nightmare. To stay with Railtown, Railtown's so beautiful, you don't want to risk losing the stock on margin. Now, if the stock somehow, let's say in a year from now or longer, but if it were trading at $30, well then, I think you can do things, and I'm going to study them and show you. There's ways of, one, hedging. There's ways of creating income, maybe, although I don't think I'd do it, because until Railtown reaches a price that feels like maturity, I don't think I'd cap off the upside yet. But anyway, there's strategies to bring in income and protect the downside. There's also just using 5% or 10% of the account to buy income producing contra-trend stocks and silver and miners but again, I really, you have to use a better training mentality than we've shown so far. And what I mean by that, you can't borrow money and play these crapshoot stocks, which in the best of times, you've got about a 2% chance of making any money. And with the criminals in there, your chance of making money, if you keep playing, is exactly zero. Your chance of losing all your money is pretty high if you keep playing. These guys want it all, and they need you. So, I'll come up with some strategies. Yeah, and the green is great. I agree. Justin, does Railtown have to report the finalization of the deal immediately, or can they just complete the deal and move forward until their next quarterly report? No, that's a more complicated question than you realize. But no, they cannot wait till their next quarterly. Once the deal is completed, they have to report it. Now, that's subject to 2 or 3 things. If it requires, for example, if it requires a press release and you have to involve the lawyers from Railtown, the lawyers from AI Partnership Corp, and let's say I'm right, that you have to involve the lawyers from, if you did 80-20, if you bought up 20% of the companies, that's 32. Let's just say that. Maybe they made a deal with 30 companies. Well, then those lawyers have to get involved. So my point is, it has to be announced, but you are allowed the time to get the documents processed by your attorneys. And that's a lot of attorneys. That's a lot of phone calls. So I don't think I've never heard of it, and I'm not an attorney, but I've been in enough situations. I've never heard that there's a maximum limit to the amount of time you can take between the deal is done and you get those final press releases and signatures, and you got to file with I don't know what they do in Canada, but you got to get it through the SEC as well. So as long as the company is having to work through that legal process, for lack of a better word, I think they automatically get the time to do that. In a small deal, you might be able to convince the regulator it took 2 weeks, but it's much more likely you have about a week where you can announce it, but you got to announce it. And technically, if it's meaningful, you got to get it out right away. And so it becomes a debate with your attorney. If she's good, she's going to tell you what the requirements are. But at the same time, if she has to have input into the final press release / documents, and there's another 15 attorneys involved, that bloody thing could take 3 weeks. And I believe you're given that leeway for that extra time. But I could be proven wrong. I've never heard that the priority of getting the news out quickly trumps the priority of making sure the news comes out correctly. I think the correctly takes precedence over the timing, as long as it's in the lawyer's hands. The other thing that's trickier on your deal, this is a fast moving space. I've tried to, as the other Justin proved, it's a space that some ideas I don't fully understand. What I sense and suss here is the money movement, the market. That's what I feel. But the idea of frenzy, the idea of explosive, all these words in the press leads me to believe that there could be things going on from meetings. They've gone to four conferences. They went to one in British Columbia, one in like Arizona. Maybe it's only 3. But the demand for conductor, particularly when you take into account that Ruffalo and Core wanted it. They want to be associated with conductor. I think the demand for conductor, we don't know that. I don't know this. I do not know this. But I suss it. I feel it, that it's possible anyway, that the phone is ringing off the hook, that there's a lot of engagement of the in-house attorneys and outside attorneys on all manner of issues. And how do you juggle that? And then let me ask you that, Justin. What if you're working on this, making that announcement, and let's just make up something extreme. Let's make up something. What's that company? Windrift, Wind Sail, whatever. And then Cognition. Let's say they have a phone call with Cognition on Friday night, and Kleiner Perkins is willing to back a licensing deal for $3 billion or whatever the hell. I'm trying to make it up. Or Google calls and they want to buy a licensing thing for whatever Google spent $2.4 billion on. But if you suddenly got, my point is, I can't make it up, but if you suddenly got such a big magnitude situation out of the blue, which I think is going on in this space, your lawyers are going to get involved, your board is going to get involved, investors, you got to make decisions, there's meetings. How does that delay whether or not you announce that the other deal you've actually come to final agreement? When this new situation, you've got to get a handle on it. And does that take precedence or priority over announcing something that's already completed if the negotiations involve the people? And I don't know, it gets complicated. So I think it's an area where you would, if I were running the company, I would turn to the securities attorney and say, I want to do everything properly. I want everything above board. You tell me how I make these announcements, because it might be more than one. I just made up that scenario. So when I'm making that up, I'm saying it might be more than one because I made up the scenario. I have no idea what their situ is. And then, Justin, what if, I'll give you another scenario. What if you hold back other news announcements because you want to get this big one finalized and announced? And let's say that the big one, and what I'm talking about, the big one, is finishing the merger. Well, let's say once that big one comes out, let's say the stock goes to $3, and then you put out these smaller pieces like the one we saw today. Attorneys on the other side will say, hey, my client would have purchased the stock. Are you telling me that you knew that you had, what, let me find out what the press release was today. Can't even remember it. I have such a bad memory, I can't even remember. Here it is. Are you telling me that you had a new release called Auto Triage and you did an announcement? My client would have purchased the stock because she loves Auto Triage, and that you failed to put material information out there. And then by the time you put it out, the stock had already moved $3. It's a nightmare. You can come up with all sorts of ways. You've always got to be thinking of an attorney on the other side, trying to find one pissed off client, one pissed off investor, and they start a class action suit. And most of those attorneys don't care about the truth. They just care about the settlement. So anyway, my point is, Justin, I'm making up a lot of completely imagined situations. But when you're in the middle of I would say this is a complicated merger. You got 160 companies. Do you have to talk to all 160 boards and CEOs? I don't know. But you're certainly going to try to talk to 10 or 20% of them, I think, and make sure they're going to link forces. And that's complicated. Lawyers don't do anything quickly. It's not how they're paid. That's not how they're incentivized. They don't want anything coming back at them later on. They've got to preen and brag and show how smart they are. They can't take somebody else's document and just let it slide through because then they're not important to their own client. It's just a whole dance, and it takes weeks, months. But if in the middle of that, working on that, other things are happening, how do you prioritize the allocation of legal time? How do you prioritize those announcements? I just gave you an example. If you're not careful and you only focus your attention on the big cojones, you might miss out on delivering some of the small tacos whilst they're hot to customers who get pissed off at you. And then there's a lawsuit. All I'm saying, Justin, is if it were just one thing and one company and it were simple, I think I could give you a simple answer. In general, what SEC attorneys will tell you, and they've told me, you cannot not announce information if it'll affect the stock price. You cannot hold information and try to clump it together and announce everything because the magnitude will make it go up. You cannot make, like you can see some companies do it. You have to be very careful not to make a lot of announcements that are just, in essence, puff pieces, because that'll look like manipulation. And you're not allowed to, like you just suggested, not make any announcements until the quarterly report. The bottom line is, if it's material information and it runs the risk that if people in the boardroom, people in the executive office are whispering about it when they're outdoors and it becomes fine, that has to be announced, because there runs the risk that that material information can then be traded on inside information. And if the decision makers haven't acted properly, lawsuit for losses come against you. Well, you didn't put it out. You should have put it out. It's not easy, Justin. It's not easy. And you've got to listen to the securities attorney's advice. They have insurance. And to the extent that you can get the other attorneys or the regulatory bodies to say, no, you're doing the right thing. That's great. We approve it, stamp, stamp, stamp. Then you're fine. But it's the core guiding light is full disclosure as soon as possible. That's it. Full disclosure as soon as possible. But there are places where it's legitimate that it's going to take longer. And that's the world we live in. A lot of attorneys, and they got to be fed. How much does the MOU really imply? Well, there's been a lot. Like if you remember in GTII, that law firm signed a memorandum of understanding. And in retrospect, I don't think they ever intended to do the merger. There was that. Anyway, there were several companies that signed. I mean, look at Trento. They signed. I don't know if they ever got to signature page on an MOU. But MOUs are really worthless. Unless the intent. What goes on, Justin, is it's like buying a house in a hot market. You found the house, your wife falls in love with it, and you know you got to get the bid in because the price is going to go up, but you are diligent. She falls in love with the first one, and you know there's 6 more on the neighborhood that you want to see. So you want to sign a contract putting as little money at risk, taking it off the market with a escape clause. As broad as you can, the other side will let you get away with it. But in a hot market, they're going to say as is, and you're going to not have a way to back out of that contract. So that's what goes on here too with when you're buying companies. And so an MOU in this case, I think, was very strong. I think I've read you the press release many times. I think the commitment by the CEOs was very strong. I think the fact they've spent 6 months on it now indicates, they may not be married yet, but there's been a lot of do you mind, dear? I don't want to sleep in the wet spot type stuff. They're engaged. They are. So I think it's very strong in this case, the MOU. But look at GTII. They put out a lot of MOUs that never happened. Is that because Reichman wasn't serious? I don't know. You could see MOUs. I don't think MOUs are particularly strong unless the commitment is there. It'd be interesting. I'd have to Google it. I've never seen breakup fees, at least to my memory, on an MOU. But on a binding agreement, a binding letter of intent, there can be a breakup fee. There can be money that's at risk. Just like when you buy a house, you put money at risk, they'll take it off the market. And then do you want to put that at risk? Still have 30 days to settle, go check out the other houses, but you're going to lose that money if you find something better. Or do you just take the risk that you leave that house and you don't get that? MOUs are a way of putting your hands, claiming a project and trying to buy a little time to make sure that's really what you want to do before they do something with somebody else. But I think in this case, the MOU is very strong, very strong. But that's, what's funny is the SEC requires both parties to put out that it's an MOU. The criminals know this, and they have their computers set up to read the headlines, and they can just start selling. And so it destroys the agreement that the principals have, percentages, ownership, maybe control, how much the value is of the stock that changes hands. And the criminals do this without any feeling at all. And the money goes to them. It's the worst allocation of capital in the world. And it's destroying the United States' strength. That and other things. But now, MOUs is where you have to start, though, because you can't get to the binding LOI until you work out a lot of issues. Look at this case, Justin. How do you get to a binding agreement when, let's say, it involves 20 other CEOs? We don't know, but let's say they're locking up 20 of those companies. The only thing you can put out is an MOU to fulfill the SEC's requirement, and then the criminals go to work. I can't imagine a system more destructive to the American people, the American taxpayers, and to our future growth. But these men don't care. They do not care. An MOU can be the first step in a marathon. Yeah. But if you're asking me if Railtown's in a marathon, I would consider that the past 5.5 months, that's their marathon. They're nearly finished with that. I mean, you cannot dawdle, obviously, when the market gets hot. I think, Justin, if I had to call it, I think they have until September 15th to get this thing done. And I mean it. It could be, we might be waiting here till after everybody comes back to school. I don't think it's going to take that long, and I wouldn't take the risk of being out of the stock that long. But if they wait past too far past Labor Day to get it done, the wall of capital that's going to come in, they won't control their own future. So I think it's going to get done. I do. If it were going to break up, it already would. If it were going to break up for regulatory reasons, we'd already know about it. If it were going to break up because there was a better deal, we'd already know about it. If it were going to break up because they can't work together, we'd already know about it. The only thing that's left is for the criminals like Northwest Bio, like DDBM, like I think is going to happen in Summit, like COSM. Their power is to destroy the per share value of anything by selling stock that doesn't exist while breaking securities laws. And the attorneys on Wall Street work for the SEC, work for the banks, work for the criminals, work for the prosecutors, work for the defense. They probably sleep with the judge, and their daughter is on the jury. It's the most incredible thing. Which, anyway, TLO after market hours. I want to go see those guys at TLO hits a new low. The problem is, Mark, the news keeps you buying. The financing keeps the criminals selling. But wow, it's up 51 cents after hours. Good for you, Mark. T-low hits a new low. But that's not new news, is it? I don't see it's not on Yahoo. It's great. I like T-low. Why don't we just say the big one and the price goes to 300? Well, you know, it's interesting. Justin, I should have emphasized yesterday that when I'm doing numbers, it's just all fantasy, because we don't know. But if you have two sources of revenue for 2026, if you have two sources for 2026 revenue, the current Railtown and the AIP companies, AIP in February, remember this other group, Windrift, they were doubling their revenues every quarter and they got to 80 million. So this AI Partners, the 160 companies, and I believe the source, were doing 400 million. They may have grown since February, 400 million. And even without a merger, but with the merger, they're going to cross-sell. So that revenue is going to go up as they use Conductor with their own captive clientele. But let's not even think of, I hate the word synergy, but let's not think of the synergy. So if AIP, there's 400 million, you could do 80-20, that'd be 320 million they could get in if they rolled up 20% of the companies. We could call that 300 million. Why could call it 300 million? I'm going to go, like you're saying, the big one. So let's say they absorb 300 million in revenue, gross. Railtown, they just announced another product. So to my way of thinking, they have 6. I think Conductor is the big one. So they have 6. I'll say, I'm just going to make it up. I'll say that Conductor can do 2 million a month. So that's 25 million a year. These others, let's say collectively, the others can do 25 million a month. So it's only 50 million in revenue next year, not the 80 million like this one, 50 million. Now what I'm going to do is I'm going to take half of that 300 million because I don't know how they're going to split the revenues with the companies and shares. So if I combine those, and I'm going for the big one, I'm not trying to be too conservative here, but I think I'm being reasonably conservative. I could see next year, at some point next year, the company could project annual recurring revenues of 200 million once they combine, bringing 150 from AIP and only 50 from Railtown. So that's 200 million. So let's go with that number. And let's say, I don't know. Let's just say, what's the big one? NVIDIA. NVIDIA is worth 4 trillion. Let's say they're the buyer. And furthermore, the multiples right now being paid are 100x, to 150x. 100x to 150x are the multiples paid. On this study that I've shown you multiple times, the last 6 years, the lowest multiple paid was 12x. The average was 25x, and the highest was 50x. So let's use, which one should I use? 25x? 200 million. I'll tell you what I'm going to do. I'm going to use 50x because we can always divide it in half. All right? So 200 million times 50 gives an implied valuation of the company of 10 billion. And imagine NVIDIA is worth 4 trillion. And we're going for the big cojones. We're not going to assume that they issued too many shares because we're kind of trying to do it now. They have 140 million. Let's just divide it by 150 million shares. That might be, I'm going for the big one, like you say it. So divided by 150 million shares. That's $66 a share. It's not the big one. So how would we get to the big one? We would multiply 200 million by 150. So that you would multiply 66 by 3. $198, $200. So I used the multiple of 50 and got 66. If you use the multiple of 150, you'd get $200. Yeah, it's possible. I think it's possible, but it's not, if you're buying it to see that right away, I think that's the wrong reason. The purchase now or the hold now to me is my opinion is 10x. It could be, it could be a range of any result, but I think it's easier to tell a story with a specific target and then maybe a range. You just assume that it's a range. There should be a rule. If William talks about your company every day, should be a rule. They pay me something, but if it goes down, then I guess the rule is I got to pay them something to use their name. I don't know. Yes, I'm not, Justin, going to put that up, but there's been a lot of conjugal interaction. Justin, I think we can get ahead of ourselves, but so can the buyers. But if Railtown gets this deal consummated, maybe it's already been consummated, but if they get to the altar and say I do, and the lawyers say yes, and the regulators say yes, and it's announced, it's possible as they cross-sell Conductor across 160 of these companies, and these companies each have niches, and they each need Conductor, it's possible these other outside companies need Conductor. The revenues can grow spectacularly, or the projection of those revenues. And so it's possible, Justin. I don't want you buying it for this reason, but your number is possible. I think you said $300. It's possible. It wouldn't if there's 150 million shares outstanding, it's 45 billion. You know, I don't think I can even put on here for Hello, 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 hello. Hello? There, that one works. One work? Does that one work? Yeah. I can't explain why you couldn't hear it. Do you hear it now? I'm sorry. I'm sorry. Damn it. Last thing we heard you say, Justin, you could be right, and everybody's speakers exploded. Oh, shoot. I can try to do it again. Sorry, I didn't see it. Can you hear it now? It's showing that it's working. Darn it. Um, it's showing here that it's working, but maybe we should just give up for the day. It's 5 o'clock. I'm sorry. I'm sure I'll say it again tomorrow. I'll say it again tomorrow. So why don't we leave it at that? I apologize. I don't know how to fix it. So, good night. Peace.